Hello, everyone. Good morning. Welcome back to the Bank on Washington 2021 Virtual Forum. I'm so glad to see all of you here for day 2. Thanks for joining us. Thank you again to all of our sponsors, and especially our day 1 innovator and advocate sponsors, Wells Fargo and Columbia Bank. We appreciate your contributions to the forum. Thank you also to today's advocate sponsors, Banner Bank and Bank of America. I hope that day 1 has sparked some new ideas for each of you here. Thank you again to Morgan Husel, John Maxfield, and Dr. Cy Richardson for your thoughts about banking, investing, fintech, and equity. If you have not done so yet, folks, please make sure you provide us your feedback on day 1. We'll drop the survey link into the chat, and it's also on Jamboard. We use your feedback to make sure we can continue to offer useful, relevant content and resources to you. So it's really important we hear from lots of folks from across sectors. So please do take a couple of minutes to fill out that survey. Well, day 1 was a big day, and we covered a lot of land with our presentations that really took us across a variety of work that those of us in our Bank On coalitions are engaging in. Like I said yesterday at the beginning, we have a really broad coalition of folks participating in this forum. Banks and credit unions, nonprofits, government agencies. So my hope is there have been some really useful nuggets in there for everyone to take forward. We're trying to make it useful to everyone, which sometimes means that not everything is useful to you, but hopefully we're all learning together. I am particularly thinking about the ways that financial services work or don't work for folks. As Dr. Richardson said, the National Urban League heard from folks about their use of financial institutions and that it's based on access and ease. And if there are banking deserts where there are no brick and mortar branches available, then who fills in? In many cases, it's been predatory services, check cashers, payday lenders, and they have found ways and figured out ways to do that really well and to meet the needs of that and find ways to do it in ways that work well for people. They've become one-stop shops, like he said. They are friendly, they're well run, they offer lots of convenient services, they have remittance to other countries, they do bill pay, you can get a loan, all the ways that folks need to manage their money in one place. But as Dr. Richardson said, this can be perfected by mainstream actors who can do it in non-predatory ways too. We heard from John Maxfield that successful banks are focused on the successes of their customers. And we heard from Morgan Husel about investing as a game and the dangerous and harmful consequences that can happen when people are playing a game with their money. And yet, we've also heard before about the gamification of creating positive financial behaviors, things like raffles for savings incentives. So I'm sitting with that tension today as gaming and money together. And I'm left considering, how can fintech fill in? What does it look like to fill these financial services needs for folks through technology? Who will that work for? Who might still get excluded? And how do we use fintech to get past just inclusion? Because it's not enough just to be included in a system if it's predatory inclusion. How do we actually use it to increase financial wellness? So please join us on slide 12 as we're all reflecting on yesterday. Slide 12 of Jamboard, as we're all reflecting on yesterday. How are you taking what you learned yesterday forward with you? What are you sitting with? What are you thinking about? And what will you implement or do differently in your role based on what we heard yesterday? So that's a lot more questions than answers. So I'm very excited about being able to dive into day 2 with all of you. I'm hoping that we'll hear some more fantastic speakers who will give us some more questions and potentially some answers as well. A couple of logistical reminders. The recording for this will be available in a few weeks. We will send out an email as soon as it's ready. The program link is in the chat, and it's listed below the speaker frame in Spondulix. And then, like I said, Jamboard, we had some really great conversation there yesterday, wonderful insights and questions. So please continue to join us there, and we'll drop the link to the Jamboard in the chat. It's also listed below on Spondulix. And with that, I'm going to turn it over to our moderators. I want to thank Kathy, Jared, Becky, and Ryan for leading us through yesterday. Great job. I appreciate you so much. We are looking forward to day 2 of the 2021 Bank on Washington Virtual Forum.
Thanks, Jennifer. And thank you, everybody, for coming back and joining us for a fantastic day 2 of what is going to be another day of generative discussion and hopefully, like Jennifer said, some good questions that we can take back to our organizations and our teams. We want to take just a little bit of time today to sort of warm up the gears, reflect on yesterday, give everybody a little bit of time to get used to Jamboard, get the coffee flowing through our veins, and get a little bit of a perspective from ourselves. I have to say that I echo Jennifer's shout out of Jamboard. Yesterday after the forum and this morning over my first cup of coffee, it was very helpful in refreshing what the conversations were about. I want to take just a little bit of time and touch on the high level remarks that I took away from each of our speakers and open it up to all of you wonderful people on page 12 of our Jamboard. I'm going to start with our first speaker, Morgan, and the psychology of money. I saw a lot of people that were about to go read his book. I'm sure that I have it around here somewhere. It sounds really familiar to me. But the piece that I really stuck with and resonated with is making sure that we build our base level and we know what game that we want to play. If we're talking in the context of a game, we know what our goals are, what we want to accomplish with our money before trying to build up and build forward. Knowing that is a goal for us eventually, that we want to get there. And in the meantime, in the now, we recognize what the next step needs to be, making sure that we have a clear idea of what the next step should be. As we were talking this morning, Jared, you had another idea that I really wanted to dig deeper on. Could I ask you to share a little bit about what Morgan's presentation meant to you?
I'm not sure which of those you're referring to, but I did want to comment on just this idea of a game and setting your own goals. That's kind of usually the guidance when people are talking about credit counseling and financial counseling. It's client-centered goals. Everyone's different. Everyone's playing a different game, even though not everyone likes that metaphor. But really with both Morgan and John, really they stress simplicity. Morgan was saying, you don't need 7 401ks. You don't keep it simple. The idea is save money to the extent you can, invest money to the extent you can, keep it simple and keep it there, and it'll grow. Especially when you're talking to younger people, because compound interest is so powerful. Just missing out on 5 years in your work life of savings or investing makes a tremendous difference because it misses that doubling period. So I really thought that was a good takeaway from Morgan, because I know for a lot of, especially folks serving lower income communities, that's a really tough conversation to have when meeting basic needs is a struggle. Just talk about a game plan for wealth generation. Even Absolutely. the word wealth can be a turnoff.
Absolutely. Thank you, Jared. I appreciate that. Becky, go ahead.
Sorry. I just wanted to jump in on that too. I think that it's really important, as Jared's saying, it's that savings thing and the simplicity, and it doesn't have to be, we talk a lot about this in our classes. It doesn't need to be like, I'm going to save $100 every week or $100 every 2 weeks. It might be as simple as I'm going to save $5, from this paycheck. And, if I can make it to the next paycheck and still have that $5 set aside, that's a win. And that habit of being able to, pull that out and over time build up and gain that momentum and get excited. And, it's awesome. So.
Yeah, absolutely.
And I
Go ahead,
think
Jared.
it becomes a habit. It does become an internal game. I don't know if this is how other people are. Maybe in the chat or on Jamboard, people could throw some ideas out there about techniques you have to trick yourself or develop a habit around saving. Because I know once I start doing it, you kind of feel proud, or you don't want to touch it because you see that money growing, and maybe you have a plan for what you want to spend it for, or maybe it's just an emergency fund. But love to hear what other people techniques or mind tricks they use to help them develop that savings mind, that money mindset, savings habit.
Absolutely. Yes. Go to page 12, throw in your thoughts, and very excited to hear from everybody. Wonderful. So our next speaker was John. John spoke a lot about the history of banking and how we arrived at this present moment, and how technology really isn't a new why, it isn't a new value that we're holding in the financial world, but it is a new how. It is a new way of doing business, and to echo a little bit of what Morgan said about simplicity and holding the course, the idea of that a consistent relationship with our clients through technology, or whatever that means, is a beneficial relationship both for the client and for the financial institution. I want to throw to a wonderful comment that I saw on the reflection page already, was that the most impactful part of yesterday was realizing good banks want their clients' wealth to grow. It's something that I can bring to my clients who may be fearful of banks. Absolutely, the idea of changing the narrative, and it's the idea that if we're sticking with the game idea, everyone is on the same team, and when that works well, then everyone wins. Jared and Becky, your thoughts just on that idea of aligning the history of banking with the current mode of doing business through a technological interface.
I think it's really important to his main point being that not going after these sky high growth in terms of returns for banking. The banks that are most successful over the long term and actually deliver better shareholder value have more modest returns in the short run. And that's our job as people that are connecting, people like myself that are working with clients, connecting them to banks, developing relationships with banks that see it that way, that see themselves as partners in the community. I'm going to pop a little link in the chat. Bankrate just came out with a study today talking about bank fees, and John talked a little bit about that, about how technology is trying to reduce the margin for banks so that they can operate, get more profit, and run more efficiently. So Bankrate came out with an interesting new study and report about how fees are being utilized as a money generating service and what those trends look like, which is relevant to his discussion. So.
Absolutely.
And I want to just point out too, we keep using the term banks, and we are not just talking about banks. I mean, we are talking about all of the financial institutions that serve people. So, even within Bank On, we have banks and we have credit unions who also provide services, banking services to clients. We have credit unions that have Bank On certified to provide those accounts with low or no fees to people. And there's a lot of other, I don't want to discount other people who are not Bank On certified. So I just want to say that too, because there's a lot of other banks and credit unions out there that offer great, products and services for people to accumulate wealth and to get into that mode of using a financial institution to actually save money and improve their financial situation. And I think that as we're talking about, and Jennifer mentioned this morning, we have these banking deserts that it's the truth. I mean, I can tell you in the Seattle area there's two very prominent banking deserts, White Center and the Rainier Valley, and Rainier area anyway. So, and it does, people, the opportunities to access, traditional low fee, low cost financial products is not there. But if we all think that people are not accessing financial products there, we're way wrong, right? They're accessing financial products that are definitely probably more in line with predatory, have much higher fees, are going to cost them more money, but yet they may feel more comfortable with those products because they know them and they are in their neighborhood and they're technologically easy. They're easy to access. They've made it really easy to access. So I think for our purposes here in fintech, we really need to focus on those communities, not just those communities, but all the communities, so that access is better, is more achievable. That's not the word, but
yeah. And I think Dr. Richardson touched on that a little bit. The idea and that being a place where technology can step in. He talked about National Urban League's pilot project with financial technology. Insu, I'm not going to pronounce it correctly. Isusu, which is a lending circle app. And I was trying to dig into it a little bit last night. I didn't have enough time to get into all the nuts and bolts, but it's a lending circle where you can with other people in your community, where you can develop credit and save and help other people borrow. So tools like that, he saw I don't know if we'll have you can go back and look at the presentation because it is recorded. There's some really great statistics on how helpful that was for folks, and some of whom were able to put enough money away to put a down payment on a home.
Absolutely.
Not in the Seattle area, but somewhere.
Yeah, for those of us in the Seattle area, we know that particular pain. To Dr. Richardson's point, I really wanted to close out this reflection on a couple of points that really stood out to me from his words. The idea that it's amazing what can happen when no one cares who gets the credit, or when we all work together on the same team, then great things can happen. And the idea that's overarching all of this is meeting people where they are in their own financial journey, in their own rhythm, in their own style. And when that's a technology that makes it easier to access financial solutions, then we can absolutely go in on that. And learning from people who are doing it well in the industry, and asking questions and learning from the people who are successful. Thank you, Jared and Becky, for joining me on a little bit of a reflection while we got today going. I want to give a special thanks to our advocate sponsor of the day, Banner Bank. Please take a moment and show them your love while we show you their love. See you in a minute, everybody.
Hello, my name is Michael Dotson. I'm the CRA Outreach Officer for Banner Bank, and we are proud to be a sponsor of the Bank on Washington 2021 Annual Forum. At Banner Bank, we strive every day to give back to the communities we serve, helping to make them become better places in which to work and live. Our community involvement goal is to have the most positive impact possible in our community, and that's why we've been involved with Bank On for the past 15 years. We know that having a bank account is a crucial step to achieving economic success. As a Bank On partner, we're aligned with a coalition of financial institutions, nonprofit organizations, and governmental agencies designed to connect unbanked and underbanked people with affordable checking, savings, and credit, as well as financial education opportunities. In addition, our involvement, along with other financial institutions, helps to dispel the misconceptions about banking, that banks are not interested in people who are not rich. It's actually quite opposite. We know that most unbanked people who are given a chance to have a bank account are fiercely loyal customers who grow the banking relationship to other products. And Banner Bank, along with our fellow institutions, will continue to explore new and innovative ways, leveraging the traditional and now emerging digital space to serve the unbanked and underbanked populations. We want to offer a safe place for individuals to keep their money, to help them to begin saving for the future and bettering their lives. Bank On provides that promising pathway to this traditionally underserved community, and we are very pleased to be a part of it. Thank you.
Thank you, Banner Bank. And I want to take a moment and introduce our first speaker of today, Andrea Alexander. Andrea Alexander has
people who are given
Andrea Alexander has over 30 years of Indigenous economic policy development. Andrea serves on the Community Economic Revitalization Board, to which she was appointed by Governor Inslee. She also serves on the board of the Native Reentry Program and the Center for Inclusive Entrepreneurship. Her executive director experience includes the affiliated tribes of Northwest Indians, the Governor's Office on Indian Affairs, and with the Macau Nation. Andrea gained philanthropic experience through the First Nations Development Institute as Director of Grants at the Social Justice Fund Northwest, Philanthropy Northwest Grant Makers of Color, and as the founder of the Potlatch Fund. Family and community are deeply rooted in her personal and professional life. Welcome, Andrea, and thank you for joining us. Take it away.
People who are given it.
Andrea Alexander has over 30 years of Indigenous economic policy development. Andrea serves on the Community Economic Revitalization Board, to which she was appointed by Governor Inslee. She also serves on the board of the Native Reentry Program and the Center for Inclusive Entrepreneurship. Her executive director experience includes the affiliated tribes of Northwest Indians,
Good morning. Good morning. My name's Andrea Alexander, and I'm a Macau tribal member. I've lived in the Northwest my whole entire life, except for when I went to do my time in Washington, D.C. In the 90s, and then I also attended University of Colorado in Boulder. I am the executive director of Tribal Technology Training, and it's an organization that's committed to digital equity and financial literacy in Indian country. I work primarily here in the Northwest, although I have experience working with tribes all over the country. My first job was under First Nations Financial Project with Rebecca Adamson on the Pine Ridge Indian Reservation in South Dakota. So I've had a lot of experience seeing different models of what we termed at First Nations at that time, native asset building. And I just want to thank everybody for the invitation. Jennifer, I do want you to give me a little bit of patience because I've never used this program before, so I'm a little nervous. I feel kind of uncomfortable right now just because I'm used to being around people. We're very verbal people. So it's been really hard for us during COVID as natives because we're very, what I call place-based. And I want to also share my PowerPoint right now, and I'm hoping it'll work. So give me one moment. Entire screen. Okay, share. Oops, sorry. Apologize for that. There we go. All right. So I hope you can see this PowerPoint. I'm going to put it on slideshow from the beginning. So I want to talk about the banking challenges that we have in Indian country. And I've been a part of the Northwest Native Asset Building Coalition that was created back in 2005. One of the things that's really important to understand is that Native people were very place-based. In other words, there's not a lot of choice of getting up and moving when you've lived on a reservation and that's your home. This is the Macau Indian Reservation. We're a fishing village. We're located on the very northwestern tip of the United States, where the Straits of Juan de Fuca and the Pacific Ocean meet. We can also see Canada across from where we're located. We're very close with our Canadian relatives, and it's always really hard to have the barriers between the United States and Canada separate us. But I really want people to understand the sense of play space, especially when you're looking at the issues of so many people that are unbanked in rural communities. Indian country has always had a history of what we call cash leakages. We have over 472 federally recognized tribes in the United States. And the reservation lands are held in trust by the Bureau of Indian Affairs and the Department of Interior. I think there's about 56 million acres of land that makes tribes probably one of the single largest non-federal landholders in the United States. But although we have we're land rich, but we're dirt poor. In other words, we have such a high level of poverty and unemployment because most of the reservations are in rural areas that don't have a lot of commerce going in. Many of our tribes don't have any cash machines or banking nearby, and that really impacts our local economy because we are held in trust by the United States government. For our treaties, we receive funding from the Indian Health Service, Bureau of Indian Affairs, other federal agency. They'll come into the reservation, but the dollar doesn't turn over. It usually links to the border town. So Friday afternoon, when people get their paycheck, they have to drive from my tribe into Port Angeles a lot of times to deposit their check and do their banking and also their shopping. So you can see how it doesn't turn over. We only have one small grocery store, one gas station in our community. We have a marina that really sustains the backbone of our economy. And most of the people either work in fishing or for the tribe. And we also have a high level of entrepreneurial spirit, a lot of artists and small businesses that have a different form of commerce. When we look at the whole issue of what I call native asset building, you have to really understand they need to take a holistic view, because if you meet one tribe, you meet one tribe. Every tribe is different. Our culture is different. Northwest Native people are very different from the Southwest tribes, the Navajo, the Hickory Apache, the Tohono O'odham, or the Gila River in the Southwest. You have a whole nother culture in the great Midwest, the Lakota, the Montana tribes. There's so many different cultures. So it's really important that when we do program development in Indian country, we have to really look at that culture. And I'm talking about asset building and coalition building because that's really how we have to do our commerce. It's really hard to create new programs in Indian country because we're a small population with kind of lack of staff, and most of us have to do everything in the community. When we talk about a cultural fit of asset building for that community, I'm thinking about like my tribe. A lot of our people still live a sustainable lifestyle. Most of them hunt, fish, they grow their own traditional foods. And that's really important to our commerce because that's how we trade with each other. We really build on a barter system in the spirit of reciprocity in our community. So that's really important when you think about the United States and our development process and why the banking system still doesn't seem to be quite a fit for rural folks, low-income folks, indigenous people. So I really want us to think together as a community and to be allies, to look at different forms of models that might work to help with the issue of, personal capital development, but also in tribes. We have a tradition of working together for the Northwest. We have the potlatch culture. That's a form of status and tradition in my community. My family's the Kaplanaho family. So if we have a name giving or a wedding or any cultural event, we have a potlatch where we invite all the family and the tribes and the heads of the 5 families to our potlatch. We have to feed them, and we give gifts away at a wedding. We give them, they honor us for coming, we give them away. That's a way of redistribution of wealth. And it's really important to really remember that concept because it's more important for a leader to look at bringing resources home to the community as opposed to having all those resources go to them. So living a sustainable lifestyle, I think, is building more and more importance, especially as we see climate change and the environmental impacts that are impacting our communities. Because we're coastal people, we're really worried about the earthquake and the tsunami, because it's not if, it's going to be when. So we have to be prepared for these type of emergencies. In the Southwest, they're dealing with a huge water shortage and drought, and that's impacting their sustainable lifestyle. So we're really pushing to ensure that we're packing in the issue of environment, finances, climate change. These are not separate issues. These are all related together. In the last 30 years, I've seen a lot of progress in Native Nations asset building. There's a new movement that came about, what I call tribal self-governance. And a lot of our Northwest leaders like Joe Dela Cruz from the Quinault tribe, Ron Allen from the Jamestown Squalin tribe, really worked hard to take the control away from the federal government. Because we have treaties and our land and assets are held in trust, they're managed by the Bureau of Indian Affairs that does not have a strong history of management. One of the things that you may have been aware of is the Cobell Settlement. My friend Eloise Cobell, the Blackfeet Nation, worked hard to sue the federal government and try to document over the $15 billion that they lost from our assets and our land they held in trust. We finally settled that after 20 years of litigation, but it still took a really big hit from our Native nations, and hence the movement in self-government is really important. That means we contract to provide all the services at the local level instead of, being managed by the federal government. So that has been one of the biggest success in Native Nation building, which I think is really important. You may be familiar with all the tribes that have been able to bring gaming into their communities. That's been probably the most successful economic development tool that we've been able to use, because we're not banked. And so that has provided a form of cash flow to tribes they didn't have, and enabled them to make the priorities and run the programs that are important to that community. So that really helped to build the personal and community wealth. The Tulalip tribe, the Muckleshoot tribe, the Puyallup tribe have been the most successful because of their location along the I-5 corridor. So location is important in gaming too. Now, being a Macau, we don't have a casino, but we do have a compact with the state of Washington. What does that mean? That means even though we don't run a casino on our reservation, it's just too far out there, if anybody knows where Nia Bay is, but we do lease machines with the Puyallup and the Tulalip nations, and we get revenue off of the machines that they run in their casino. So it's been a great form of sharing resources on an intertribal basis, and it builds that political unity. So the other thing that we really look at is finally, when you get that cash into your tribal government or community, you want to include the human, social, cultural, political, and institutional assets. These all have to be built up. So you'll see that we invest a lot of money into our tribal elders programs, our scholarship programs so that our kids can go to school, and building up our social capital, which are safety net programs that ensure that people, when they're in poverty, they have resources. And so I would say tribes do a really good job of taking care of their community when needed. The asset control at this level has really been aligned with our worldview of how we want to see the world. When we look at asset-based development, we want to look at investments in people, in communities that strengthen tribal sovereignty. That's our ultimate goal, because the treaties are the ultimate sovereignty that we have with the federal government, and that allows us not to be just another community of color, but a sovereign tribal nation within a nation. So that's really important. And when we saw the native control come about after the Cobell Settlement, finding the oil companies stealing oil, mineral companies stealing our minerals, timber companies stealing our timber, this happened in Neal Bay, and not really getting us the fair value on our dollars, then we started building native wealth. So I'm going to talk a little bit about the Northwest Native Asset Building Coalition. And that started, I can't believe it's been since 2005. That feels like a million years ago. But at that time, that was a new conversation for our community, especially when you look at the over 100,000 natives that live in urban areas. There's nobody serving Seattle-based urbans around asset building. So we wanted to try to figure out how we could access resources and close some of these loops. When we looked at Northwest Native Asset Building, we wanted to build intergenerational wealth and help form connections with our community, our culture, and having a coalition of people have a common vision and a future. But remember, like your nonprofit organization, most of this was all volunteer. And I would say natives are probably the most volunteered people around. We have to have a committee for everything, every grant, every program. But it did give us a forum to discuss opportunities that could be available that were not available before. One of the hardest things that we're still facing, and we were addressing at that point, is the lack of Native American housing in the Seattle area. We were totally invisible. We worked closely with one of the great leaders in the country, Iris Friday. Many of you might know her. She's with HUD, and she's an expert in an instrument called the 184 program. And I bring this out because I want you, if you are, a banker or a program developer, the 184 program is brilliant. It is a guaranteed HUD loan so that natives could buy a house. And that is a huge thing, especially when you live on the reservation, which is trust land. Banks do not want to lend if you have a home on trust land. Why? Because if you default on the loan, they can't take it away. So we have a really hard time obtaining traditional financing. Yes, many tribes, all tribes have a tribal housing program that's funded through HUD called NAHASDA. And most of the tribal housing programs have their own board, their own staff executive director, but they have to build, HUD homes. And it's really hard to qualify because of the income requirements. If you make too much money, you won't qualify. If you don't make enough money, you'll have a hard time getting in. So you could see that we had a lot of leakage around that issue. One successful example is my tribe was able to develop a 184 pilot program where they provided training to emerging Native homeowners that lived on the reservation. They helped with the class on how to be a homeowner, how to clean up your credit, and qualify for a traditional mortgage. So we have a lot of bankers. These are bank loans, but they're guaranteed by HUD. So that's been a very, very successful program. I was really impressed with that situation. Going back to talking about in 2005, before the Great Recession, we were listening to the bankers yesterday, and at that time, Washington Mutual Savings Foundation, that was a great source of investment into our Native programs, our community development programs. It was run at that time by a good friend of ours, he's still around, Tim Otani, and Juan Aguilar, who's over at the Yakima housing program now. And they were really good partners. They funded our Northwest Native Asset Building Coalition along with First Nations, and then an asset building grant from the state of Washington. But if you'll recall, after WAMU went under and everything fell apart, so did all the asset building programs. And so we haven't really seen a lot for urban Indians addressing this work. And I really want us to think about how we can fill those gaps. The other thing that was always been very apparent, most Natives don't really have strong financial skills because of the intergenerational poverty. So if you've never really had experience working with mainstream financial institutions, it's really hard to have a attitude that's healthy around money because it wasn't really prevalent in your lifetime. Now that we're seeing the success and we're seeing self-governance, our Native kids are educated, coming out of college, getting good jobs. I'm seeing a growing new Native American middle class that's eager to purchase vehicles and homes and have been successful. But again, if you're, for example, Nia Bay, in the Olympic Peninsula, there's a lack of banking institutions on or near our reservation. There used to be a Bank of America in Clallam Bay. That closed a long time ago. So there's not even a bank except for if you drive all the way into Port Angeles, which is about, 2-hour drive. We do have a cash machine in Nia Bay now, so that's kind of a big deal. But right now, there's a lot of people that are unbanked, and that to me is a really big problem. I'd like us to really think about how we can develop other models or instruments that would not be so restrictive. Just to give you an idea of how isolated my tribe, this is an aerial view of the Macau Indian Reservation. And some people say it's at the end of the road. We say it's at the beginning of the world. I love this. You'll see our marina down there, and we are a truly coastal community. This is on the Pacific Ocean side. No, this is on the Straits of Juan de Fuca side. Going back to Northwest Native Asset Building Coalition, we were really working to create visibility for a population that's really invisible mainstream providers, especially back in 2005. In those days, urban Natives were very invisible. we're really scattered and fragmented because our people had been moved out of some of the neighborhoods like Beacon Hill and downtown Seattle. They really had to be moved out because a lot of our people couldn't afford to live in King County. So we organized the Asset Building Fair in 2005, and we were just trying to link our Northwest Native community with key resources, banks, and people that could help with earned income tax credits, tax preparers, other types of resources that were really prevalent and healthy at that time. We also held another fair in 2006, and we were able to gain direct feedback to close the gaps in services for Native families. Outreach documented that Native families needed help with the following: really needed scholarship workshops and information. That still remains today, and I'm sure that remains for your family. Another big area that's really key is technology training services for adults. What COVID brought about was the realization of how reliant we are on technology and the internet for every part of our civil society. And so that really highlighted the have and the have not people in America, and how failed the FCC policy was for providing economic parity of services for technology and broadband services. So that has even become more complex as we see the complexities of how we use technology and how difficult it is for older adults that did not grow up with technology. We also witnessed in COVID, small business development resources were a huge problem when they came out with the with PPE loans or paycheck protection loans. I think that really did highlight and gave fact to the matter that most of those early loans went to larger companies, not the small businesses, few to communities of color, because again, our people did not have the tools and the accessibility to even form a request. The other thing that was really important at that time was just information on the earned income tax credit. With the new tax credit, child tax credit, that's even more important. And so that seems to be an ongoing thing. And affordable housing services in COVID, it's just getting worse. Unfortunately, it's not getting better, that are homeless, and the lack of affordable housing in both our urban and rural areas seem to be a critical unmet need. And I think that we can look back on that again, because the Great Recession, yeah, we went through that. Did we learn lessons? Nothing really changed in our system. It got worse. They tightened up the credit. They made mortgages very difficult for anybody to attain. And then also it was hard. The hardest thing was the construction. The construction companies were not building, so we were not getting new stack of affordable housing into our system. It just really never fails to astound the high level of building we have, like in the Seattle and Portland urban areas, and we can't keep up, but we're seeing the growing people on the homeless streets. So what can we do as thought leaders in our community to address this situation around housing services and programs? What are those instruments that we could work on together that we know work? That's what I'm not seeing, these breakthroughs in forming consensus and interesting public-private partnerships and having our private investors come in and sharing in this. Where is everybody? That's kind of what my question is. So when I talk about new models, because in Indian country, everything is a new model, because all our programs are sort of new. So one of the models that I've seen that has been successful is Native-led community development financial institutions. those have been really successful. The funding comes out of the Department of Treasury. The grants, yes, they're hard to, takes a long time to apply to them. But right now, I think there's over 20 community CDFIs around the nation. And we have 5 native CDFI networks that work to coordinate policy and program issues. So when you work in Indian country, you have to work as a coalition because the policy, the federal policy and the state policies impact our people at higher levels than other populations in our community. So the policy programs sometimes that we have to work around can take a long time and be extremely complex, and making sure that we have the legal infrastructure to conduct commerce is just a big struggle. So it's so important that our people are coming together and sharing ideas of how it worked. How did you do this at your reservation? Because these are not things that they can teach you in college. They don't know any of that. So we do have educated tribal members, but unless you do your time in Indian country, I don't think you can really get an idea of that experience and how to combine those two worlds. The other thing that I really want us to think about today too is, are you doing any alternative lending models? We need more. What does that look like? We are not getting cash in the society to the right people that are smart, good ideas, hard workers. They just didn't come from money. Where are we with that? Come on. It's just so frustrating to me. When we think about that, how do we do a better job in our network of building a peer-to-peer support and financial empowerment? What does that look like? How do we define that? As a Native woman, I need allies because, we don't have staff. We don't have big programs. We need to rely on the expertise of other people that are working on these issues on a day-to-day basis. Another thing that I'm not seeing really, I'd like to see come out too, is when I was at First Nations and working with my mentor, Rebecca Adamson, she made a lot of progress with social responsible investment community like Calvert. And I know that at Philanthropy Northwest, they have a social responsible network that was, I think at one time there was a lot of vitality going on there. I'd like to know that. Where are these people? What role can they play? How can they come in and bring together as people that have money? Because I know this, working in philanthropy, if you got money, you like working with other people with money. But where do the people with money come and work with interesting entrepreneurial thinkers that can help put these other models together? And then last, I want us to think about what are some of those lessons we learned in COVID? What happened in America that we can move forward with? Because I think that's going to be impacting us for a long time. Well, it is still. So I want to talk about actions that we're taking right now. We're forming partnerships with different nonprofit organizations to provide technical assistance training around financial literacy and digital equity. And I think that's really important that we're bringing together the entrepreneurial network, the financial literacy people, and the digital equity people. Tribal technology training, we provide financial literacy training and digital equity training, but we're just getting the funds to do digital equity training. So the reason we need to look at digital equity and link that is to finance is because if you look again at the policy in America, the FCC policy for providing broadband and internet services is controlled by just a few companies that have the money to lay the fiber in the ground. The infrastructure is what's expensive. And what happened is we don't have strong infrastructure in America. And I'm happy to see that we're trying to get something passed. I wish we would pass it. Because of the lack of infrastructure in America, we're seeing so many huge pockets of rural and urban areas too that don't have access to even internet services. So we have a lot of areas that are not covered. And that's the other hat that I have to play on the community, the CURB board, Community Economic Revitalization Board, the state of Washington. We provide low interest loans and grants to rural economic development that are forming public-private partnerships to bring services to their community. So we fund in a lot of different areas. What's really interesting for me to observe is the planning grants that went to 9 tribes in the state of Washington. And I can't tell you how much that meant, because again, there is no funding available, whether it's at the federal or the state level, that was helping with broadband development. And so broadband is really important when we talk about fintech and services, because if you don't have access to broadband, you can't do online banking. You don't have access to these instruments. So right now, I'm pleased to say that due to the leadership of Senator Cantwell, Senator Murray, we just passed the Tribal Broadband Fund, and the grants came in. I think 280 tribes applied on September 1st, and we're hoping that they'll be awarded in November. That's really important because those grants will help cover fiber and internet connections in the ground. So with that, though, digital equity is this new network growing in America, and it's very strong in Seattle. We're partnering with the Equity and Education Coalition. They provide services to our non-English speakers, immigrants, communities, and we really deployed and worked really hard during COVID. I worked with the United Nations of All Tribes Foundation in Seattle to deploy and hand out laptops to our grassroots low-income Native people in hotspots that had service for a year. But then just getting the hardware to our people was one step. The next step is, do they have the skills to use them? And no, they do not. So we're working with the city of Seattle. David Keys, he's with the Digital Equity Program, a national leader in this movement, I might say, and that's what makes me proud to be from the Northwest, because I think we're all really smart. No offense to anybody else in the other part of the country, but you're proud from where you're from. So with this grant, we're providing digital equity training, again, in partnership with the state of Washington library system. So all this collaboration, though, takes a long time and development. And so we really need to be efficient and share best practice ideas in this growing network. I also want you to pray that Senator Murray's Digital Equity Act is going to pass in the new infrastructure bill. Senator Cantwell Murray have worked very hard, and Representative Susan Del Benny and Derek Kilmer. We have strong leadership. Kathy McMorris Rogers on the east side. We have strong leadership trying to bring resources to the states and region. If that bill passes, they do have bipartisan support. They do have support from both sides of the aisle, which is really good news. That will provide training to community-based organizations around digital equity. So I can't emphasize the need to ensure that we have trusted advocates, navigators on the ground that can provide this digital literacy training and financial literacy training. It's still really needed. So that's exciting news. And we're working on finding the intersectionality of these issues. So when we say fintech, I need more help on what does this mean to natives. I think we need to look at this closer. I'm not really sure what that really means right now, but I do have hope that bringing all these different pieces together are going to help. So that's the end of my slideshow. I'm going to turn it off. and talk to you directly. Okay, just can't see the chat here. Anyway, so with that, I apologize if I was very weak on my technology skills this morning. That's why I'm trying to get technology training up and going. Please, if you have questions, it's 9:30 right now. I think I have like 15 more minutes to questions, but I would like to know if there's any questions or anything more that we want to discuss about this morning. Thank you. Yeah, I'm ready for the questions. Come on in.
Awesome. Thank you so much. And Andrea, I really appreciate your time. And we covered a lot of ground there. And I've been trying to keep up with your notes. And I'm very excited about the Tribal Broadband Fund that's coming. We do have some questions in the Jamboard. And everyone, please keep them coming while we get going. But the first couple of questions that I'm going to sort of combine into that came up into the Jamboard. There was a question about cultural ideas of wealth and practices for generating wealth for tribal members. And are there any banks or credit unions that are standing out right now that are doing a good job of matching those?
Yeah, there are. I think that if you go to Port Angeles, some of the banks in the local area are doing a really good job. We've been really happy with Beneficial Bank. US Bank has been a great partner. We are seeing some successful partnerships out there. And then also some tribes have developed their own credit unions. And that's been a really interesting model to look at. But I think that because of the problems on the reservation, the most successful structure has been through the CDIF, because they're able to, leverage money and make loans.
That's interesting that the CDIF is the most effective, and that there are local credit unions that are coming into existence. Could I ask you to dig a little bit deeper? What does that look like? What is a tribal credit union? What are their strengths? How can we help?
So, for example, the Yakima tribe has a credit union, and tribal members are able to get loans through the tribal credit union and also get their checks automatically deposited. So if you work for the tribal council, then you can automatically get your paycheck deposited. And that makes a really big difference of not having to drive to the border town to have your check deposited. So when we see these banking relationships strengthen, now, some of the gaming tribes have done a good job of consolidating all their accounts into one account and working just with one bank. And so these different financial institutions that do a good job of courting the tribes as a customer have been able to benefit tremendously with a huge amount of deposits. There's over $300 million a year from the Tulalip tribe that gets generated to their local bank. But again, because of tribal sovereignty, the tribes don't like to share a lot of their financial. They kind of keep things confidential, so you don't know how all their finances are.
We get the sense that they're doing well. And yesterday we talked a lot about how making things easier to access increases general financial well-being and financial health. So that makes a lot of sense. I appreciate you talking about that. One of the questions that came up earlier and a question in the chat, I'm going to try and combine here. How can you share any examples of programs that you've seen work really well between Indigenous and non-Indigenous agencies? And the question sort of in the chat is, what are some best practice suggestions for entrepreneurial training for in our Indigenous brothers and sisters as we sort of come into that idea that you talked about of having tribal leadership, bringing it home rather than having it come in from the outside? All of that sort of combines into for the biggest impact we want to build from both sides of having culturally responsive and respectful resources outside of a tribe, and also building up resources so that tribal members can start from the ground up themselves. Have you seen any good examples of that, and what comes to mind as we think about that area?
So if you look at healthy partnership development, always remember, just like any other business, it's built on personal relationships. Tribes are even more extreme that way. They will not do business with you if they haven't met you in person. They don't trust you. They got to look you in the eye. So if you're a bank or an organization that wants to do business with the tribe, you really need to go set up and meet with the entire tribal council. We are truly democratic. We don't have Republicans and Democrats on the res. We have to have 100%. We have to have consensus in our leadership. And if my tribal council, we only have 5 on my tribal council, if everybody's not consensus, they'll table that decision for years. So it does take a long time. Time is a different dimension in Indian country. But what I've seen happen is if you come in, with your heart and truly intention, make a good presentation to the tribal council, and form a relationship. Those relationships last through generations. And so you'll see in Port Angeles or by the Tulalip Res car dealers that get so much business from the reservation folks. They do really well with their people. We buy a lot of cars because we have to travel a lot because we're always on the road. We're going to tribe, potlatching, going to powwows. So there's a real whole different underground economy in Indian country that's not known. In other words, we do a lot of trading with each other in our art and our ceremony, and just that is really important. But when we look at allies, always think a tribal government is like a successful public-private partnership. You have the tribal council here, but they also have the enterprise board or the gaming commission. The tribal council usually appoints the gaming commission or the enterprise board. And those enterprise boards run so many diverse businesses. Most of them are going to be your C-stores, convenience stores, gas stations, restaurants, and hotels that are linked to some of our gaming casinos. And so those are where you see the really interesting partnerships. And when you look at broadband development, I also just want to add that one thing that's been really successful has been the ports. The ports have been a huge economic stimulus for rural country because they've been able to lay down the fiber, but then they have to use an ISP, a retail internet provider, to give services to that community where there was none. So always think of public-private partnerships and allies, because our population is so small. We don't have enough people to do all the work that's got to happen all the time, right?
Sure. I really like the piece that I'm taking away from that is it's patience and building that relationship across the entire scope of the people that you're going to be working with, and having a patient approach. As you mentioned, time can be a little bit of a different metric. That's a very insightful phrase. Thank you very much. One of the questions that came up in the Jamboard, and I think really ties into this, and I'm going to combine 2 questions again. And I just appreciate hearing you talk, so I'm going to throw as many questions at you as I can. But I'd be interested in hearing your perspective on the different challenges for.
I'm sorry, you cut out a little bit. You're freezing up, Ryan. Okay.
Oh no.
All right. No. Well, okay. Well, can you repeat that question? You're back.
Okay, I'll do my best.
Technologies and it's not our friend, is
it? We didn't warm it up right. So I'm hoping to get your perspective on the differences in challenges facing, especially rural communities and more urban communities that you might work with, and how fintech or any technology makes that easier, or how that technology interface is happening right now as the difference between rural and urban communities is
yeah, you know what I'm seeing on the reservation. And so there's always a strong urban rural link. So I'm an urban Indian. I call both Portland and Seattle my home, but my family lives all on the reservation. I have family all over the Northwest on different reservations. We have a very strong intertribal trading network. And so the way that we've been, when we started organizing COVID, my brother and I sourced face masks from the reservation. We had them made on the reservation. We sent to the urban native community because we had money. We had money to spend. So we bought it from them. These are home-based businesses. They were really happy. They got money. The way that we had to pay them now because of COVID was I use mostly Facebook to pay. And so you're seeing these other instruments and you're seeing them use Venmo and Facebook and these other social media platforms to do their commerce. Because again, because you don't have the mainstream banking available, we're going to these internet sources. And that's of concern because of cybersecurity, which we know is a growing problem. I think that if we can really look in our state of Washington, at least, I'm in Lynn's network, Department of Financial Institution, we have a grant from them. What are some of these alternative banking models that we can really lift up and share with each other so that we can form? I've always been really big in forming that urban rural link because we're, look, you got Seattle, we're one of the most successful cities in the world, but is it going out to Olympic Peninsula? I don't think so. If you've been to Clallam Bay and Forks, they're not, they still are pretty small and there's not a lot of commerce going on out there.
Fair enough. I appreciate you being, we need to build that relationship between the two and build the connection between our folks who live in more rural settings and in urban settings as still related. It's still a relational system. And using technology to build on that rather than replace it, I think is
Ryan, the other thing I want everybody to think about, I want you to think about this too, the cash flow. Where does money come from? So when it comes down from the federal level for small business development support, for example, okay, that comes from the SBA. Where does it go? It goes to the state. Then the state gives it to the SBDCs. Those are located in various what I call mainstream hubs that are outside of sometimes our BIPOC and Native Indigenous communities. And so we have a big problem there, just the service delivery. The same is true with the workforce program. Follow the money. It comes from the feds. It goes out to these workforce boards who are comprised on the workforce boards, usually mainstream white men. And so we're not seeing that diversity and the understanding at the grassroots level of what the needs are. This is where we're seeing the failure. I'm on the board of CIE. It's called it's a small business center for inclusive entrepreneurship. It's a small organization that's serving rural areas in micro and mini enterprise businesses. They've done a tremendous job of helping these really small businesses. These small businesses are the backbone of rural communities. And we really need to build up these small businesses. Do they have the capital, the technical assistance, and the access technology? Those three things are really important. They are the backbone of America. They're still in rural communities. We're not helping them, right?
It's a great point, and I appreciate you bringing that up. As someone who obviously white guy needs to do the listening and the hearing and the stepping back when I need to. How do you have any thoughts on? And we're nearing the end of this question section, and I really appreciate this. But for folks who are looking to partner and build that relationship that you've been talking about, are there any thoughts that you want to leave us with on immediate next steps or mindsets that we can keep as we work to better connect each other with our neighbors and friends?
Absolutely. We need to speak with one voice. We need to form policy agendas. We're not doing that. This network is not working together. So we need to have all the allies, the nonprofit organizations, the asset building organizations, the banks. We got a lot of great people working at the banks. I love my banker. I love US Bank. We have a good relationship. That's why I like him, because he's my friend. So how do we form this relationship? Now with COVID, it's hard to do. So what do we do to put up meaningful collaborations and forums where we're really building those personal relationships and allies so that we can achieve policy points? What are those talking points that we take to your county level, to the city of Seattle, to the state of Washington, to the federal level? what we're not seeing that collaboration. And I can say COVID has separated us because we're used to being together as people. That's been the hardest part in Indian country. It's so hard for me to get a damn thing done because I'm used to seeing my people 3 times a year at the affiliated tribes Northwest Indians. That's where we get our business done. It has to be done in person. So how do we carry those personal relationship in virtual forums that don't give us that link? So I'm just telling you, digital equity training, the way we'll do it is we're going to do 3 in person, social distancing with the mask, testing, but we've got to be in person. What if that person doesn't even know how to use a mouse? You know,
Sure.
I mean, it's like, it was painful. I'm sure you guys are watching this morning, just struggling. I hate working by myself. It drives me nuts. I'm used to being around a lot of people. I've got a big familia, right? So what do we do to look at where we're at with COVID? It's here. It's going to be here for a while. Maybe small social distancing in person. And then that helps us follow up and have a linked conversation, because there's nothing like breaking bread with people. And I had my first financial literacy training at Lower L1 Port Angeles, and then at United Indians in Seattle. Everybody was so happy to come together. And of course, we had good food. And you always have to have good food. In any Native event, if you don't have good food, they'll talk about you for 20 years, brother. I'll tell you that right now. Not a good meeting. The food wasn't that good, or they didn't have food. That's the worst thing that can happen.
I'm gonna write that down. And one thing that we've all learned in the last 19 months of a pandemic is how to have empathy for folks in a technological setting. So, Andrea, it was an absolute pleasure hearing from you. Technology or no, I definitely appreciate hearing your perspective, and I hope that we get to break bread soon.
Okay, well, thank you for the invitation. And again, I was nervous, but you know, I really like working with everybody in this network. I hope we can strengthen this network. I think it's really, really important that we do have that common voice. So I just want to emphasize that.
Absolutely. And the more we talk, the more we have a common voice. Thank you very much for joining us.
Thank you very much. You have a great day, everybody.
Cheers, you too.
Bye.
And with that, I believe we have Jared and Becky who are going to lead us into a little bit of a next step.
Wow. Jared, you're muted. That was amazing, though. I will say that was incredible.
Yeah, that was such a rich discussion of all kinds of different ideas there, from the 184 program for lending and all the complexities around mortgages on tribal sovereign land, digital technology and access. As someone who works for an agency for whom she threw some shade on there with the workforce development agencies not being inclusive enough, I'll be taken to task. I've already sent a message to my leadership that was brought up, and how we can make sure we do try to do that. But apparently there's some work to be done. So great stuff. Want to thank Banner Bank again for bringing us that segment, and we're going to jump to a quick break. We'll be back around, let's see, a little less than 10 minutes, about 8-minute break, 9:56 or so. We'll jump back in and get ready for our next group of presenters. So everybody get out there and stretch and refresh.
Welcome back, everybody. I hope everybody had as great of a time with Andrea Alexander as I did today. That was awesome. I thank you for coming back after break, and I'm going to hand it over to Jared for a message from our advocate sponsor.
Oh, thank you, Becky. And thank you to Bank of America, who's our advocate sponsor this year for the Bank on Washington 2021 virtual forum. We appreciate their support for Bank On Initiative and the work of the Financial Empowerment Network. If you're interested in learning more about their Bank On certified account, please check out the Bank On Washington account's website and link to their Advantage Safe Balance. And we'll link that in the chat if you want more information.
Awesome. Thank you, Jared. So with that, we're going to move to our next speakers, our next presenters, and I will introduce them. We have Darren Liddell. Darren has been working in the financial empowerment field for over 10 years, and he currently serves on the government and nonprofit partnerships team at Propel, which is an organization that builds modern, respectful, effective technology that helps low-income Americans improve their financial health. In this role, he focuses on partnering with organizations to positively impact families receiving supplemental nutrition assistance program benefits, otherwise known as SNAP benefits. Darren is passionate about empowering community members to achieve their financial goals, and also currently serves as a member of Prosperity Now's Taxpayer Opportunity Network Steering Committee and the Association for Financial Counseling and Planning Education's Government Affairs Task Force. Darren's a proud tax nerd and a racial wealth equity advocate. He's always aiming to learn more about opportunities to address the racial wealth divide through policy, financial coaching, fintech, and tax time. Outside of work, Darren is an Eagle Scout and enjoys learning new cultures through food. Then we have Chris Moreno. Chris serves as a program director for Catalyst Miami, a nonprofit focused on eliminating poverty in Miami, Florida, by empowering community members in the areas of prosperity, leadership, advocacy, and network building. Chris graduated with a Bachelor of Arts degree from the University of North Carolina at Greensboro and a Master of Education degree from the University of South Florida. Within Miami-Dade County, Chris has held a variety of roles with social impact organizations such as the United Way Center for Financial Stability, WorkSquare, and Catalyst Miami. Chris enjoys giving back to his community through the IRS Volunteer Income Tax Assistance Program, which provides free tax prep for low to moderate income families. In his spare time, you can find Chris biking his local rail trails or spending time outdoors at one of the many Florida parks. And remember, to read our panelists' full bios and learn more about their organizations, visit the Bank On Program Forum at bankonwashington.org. So welcome, Chris. Welcome, Darren. Thanks for joining us today.
Thanks for having us.
Glad to be here.
Jared, thank you all. All right, so today we're going to talk to you all a bit about financial apps as tools for client success. You've already met Chris and I. Thanks for the generous introductions. The only thing that I'll add on to that is I also do work with Catalyst Miami. So I'll be wearing a few different hats in this presentation. My Propel hat at times, my Catalyst Miami hat at other times. I'm a consultant, so as you know, we often work with many organizations. But I'm grateful to be able to work with the organizations that are really working to impact communities and low-income communities in particular. So with that, want you all to keep in mind that we will be looking at questions, and we should reserve some time at the end of this presentation to go through questions. But please feel free to add your questions to the chat in Spondulix or into the Jamboard, and we'll do our best to get to them at the time at the very end. But yeah, excited to hear what you all have and to hopefully teach you some things along the way. So what are we going to cover in this presentation? We'll talk a bit about Catalyst Miami's FinTech project, as well as we'll talk about some financial apps that we experimented with during that project and used with clients one-on-one. So you'll get to learn a bit about what some of those apps are. You learn a bit about what was successful, what wasn't successful, what some of our learnings were, as well as hopefully you all get a chance to ask some questions about what we did along the way. And I'll speak a bit about some of the apps that were successful too. Cool. So with that, a few things to kind of prime the pump. When thinking about financial apps with clients, when thinking about, best ways to meet clients' needs, there's not really a right or wrong answer. So we, in particular, at Catalyst Miami, I was working full-time at the time we ran the study. We had and we'll talk a bit more about the study in particular, but the things to keep in mind are that we were a team of financial coaches working one-on-one with clients to help them to achieve their financial goals. And with that, typically comes with customizing the plans to meet client needs. So, you want to know that that means lots of flexing and flexibility to work with whatever works best for that client, and keeping their values and goals kind of top of mind and top priority. With that, a traditional method may work for your clients. Apps are not for everybody, and we'll say that a few times throughout the presentation. Technology is not for everybody, so it's just most important to keep in mind what works best for your individual client in that moment. With that, we'll go on to the next slide. All right, so we think about apps in a few different ways. In particular, there's a few categories listed on this slide: tracking spending, budgeting, banking, money management. And these are most of the topics that clients tend to come in and ask about. Less common are things like investing, but it can happen. Someone may ask, I'm interested in starting to put a little bit away to invest. And I've heard about this Bitcoin thing. What's that all about? And we want to have answers for them, even if we're not experts. And we'll say that oftentimes, especially on the topic of investing, is you need to have licenses to make recommendations, and we don't. So we don't make recommendations, but we can provide education. So know that the presentation will be broken up when we get to the apps portion into many of these same categories, since they're the lens we tend to look at for our financial coaching also. And with that, I'm going to pass on to Chris to tell you all a bit more about the Fintech project study.
Yep. All right. Thank you for the opportunity to be here today. And yeah, so as Darren mentioned, back probably 2016 was when we were both working together at Catalyst. I'm still here, different role, but we're both financial coaches. And as us being kind of financial coaching nerds, we'd always been testing and learning about different apps as they come out. I know Mint was probably one of the earliest ones. And we really thought of how can we use these as a tool to help in our financial coaching model. We believe that all clients, when they're going through financial coaching, are creative, resourceful, and whole. And understanding that aspect of financial coaching and knowing that how can we provide resources that can maybe help out to help these clients achieve whatever financial goals that they have. So first, we tested these internally as staff. We had opportunities to kind of vet through them. There was even some apps that we actually had the opportunity to speak with some of the app developers, some founders for different apps, and just to ask them, who the audience that these apps were intended for. Had a series of questions just to really make sure that is this app going to meet the need for our clients. And so we kind of did that pilot. Then we selected, as a staff, and began to offer them via financial coaching or through tax preparation and VITA. We then received some funding because it was our funders overheard of this testing. And so we ended up developing a white paper, which I've sent to Jennifer. So I'm sure she'll send it out to you all afterwards. But our hypothesis in this white paper, we just believe that financial apps can be as a tool to automate positive financial behaviors and make financial goal attainment easier for LMI communities with financial coaching and outcome tracking. And that's a big thing. I think when we've done this presentation in the past, people have been like, so you're trying to replace financial coaches? And we're like, no, that's totally not. It's actually the total opposite. We believe that these are just another tool that financial empowerment employees or financial coaches can have in their tool belt when working with clients, especially with younger populations. As in Catalyst Miami, we do have some partnerships with our local community colleges to provide financial coaching support for their students. So next slide. So we worked with the University of Miami, and these were focus groups that were conducted with clients in 2016. So like I mentioned, we work with developers. Our idea was to create feedback loops so we can share what feedback we were receiving from our clients, data sharing, and to build partnerships. Then we wanted to select apps to study more deeply and then inform the field in developing easy to use guides for this work. For example, we have like an app handout that we use for financial coaching that would go over some of the different apps for clients and kind of educate them on some of the different apps out there. So we had about a 20 to 25 participants and just wanted to give you a little bit of a breakdown of our participants. I don't know if in Washington it's similar, but for us here in South Florida, it pretty much is mostly females that we serve, less males. And then we have a large Black and Latino population, and a majority of them were working at the time. And like I said, we do work with the schools, so we did have a good percentage that were either full-time school students or that they were working and going to school full-time. And then you could see an annual income breakdown, but a majority were definitely in the low to moderate income range. So after the focus groups, these were some of the key points that were proposed in the paper from our evaluators, and it was the importance of credit, how to build it, how to repair it, and how to maintain it. As Darren goes over some of the highlights, you'll see that credit apps were probably the most, the apps that our clients were most interested in, and they felt like those were the easiest to use. The apps in the coaching process helped raise client awareness of good and bad financial habits, especially when it comes to budgeting and spending. And then the one great thing about apps is that it helps us celebrate the small wins. And I think that's really important because understanding financial literacy with our clients and really getting them to understand the concept that it's a marathon and it's not a sprint. And so we want to celebrate those small wins along the way while still having that light at the end of the tunnel and knowing, look, yeah, it's going to take a long, for some it may take longer than others, but to keep that motivation high, you definitely want to help us celebrate those small wins. And apps have built in like nudges and different features to help clients and understand those small wins and really celebrate them. So the average length of participation was a little bit over a year and a half. And there was a range of anywhere between 7 to 48 months. The client feedback was overwhelmingly positive. So clients shared their sense of organization and control over their finance. They were extremely pleased with their relationship with their coach. And they described coaches as non-judgmental accountability partners. So again, it's not really that an app would take the place of a coach, but really it was just another resource that really enhanced the coaching experience for our clients.
Perfect. Thanks, Chris. So thanks for kind of setting the stage. I'm going to talk a bit about the results from the study. So Chris mentioned that, we as coaches, we use apps with clients one-on-one, but to kind of get to these results and to get to a lot of the lessons learned, we held feedbacks and conducted surveys to get these answers from folks. So some of those results included participants letting us know that they felt empowered and noticed progress towards their goals. And in particular, when looking and working with apps, some clients found it easier to monitor their progress and to enhance their sense of agency around their financial goals by working with their coach and working with that and using an app in particular. As well as many participants expressed interest that they would benefit from more hands-on training around how to use the apps and what the features were. So in the next slide, I'll talk a bit about how we did that. But typically, what we kind of saw was the coach's expertise of the app tended to translate into the client expertise of the app, and the coach showing it to them in the session or assigning it to them as homework often led to them like learning a bit about it. But sometimes clients wanted more hands-on time to learn more about it, or would come back to sessions after being assigned homework with questions for their coach around like, I wasn't sure how this worked, or this didn't make sense to me. Can you explain how this works, or what I'm seeing here with my credit or my budgeting, or it's not adding up the way I hope it will, that kind of thing. So all that to say, there was a desire for more time, more hands-on training around using some features of apps. And then in addition to that, so did I go over the graph in the last one? Sorry, y'all. So I also wanted to highlight that the apps that received the most usage and were used most frequently were credit apps, as Chris mentioned. So Credit Karma and Credit Sesame were the ones that rose to the top, with Mint being the one that was most popular after that. And I will say too that the N for the focus groups, so the number of people that participated in the focus groups is around 20 or so folks. And then over the course of the year, around 100 or so folks received financial coaching, and that incorporated the apps as well. More folks did that did not, but again, this is not for everybody. All right, so diving into the results a little bit more, most participants stated that they utilize financial apps on their phones. Others stated that they prefer to use their computer or a tablet, but phones were overwhelmingly the most popular way for folks to engage with. As you know, working with low-income populations, many folks don't have a desktop computer or have internet access at home, and their phone is their primary way that they engage with technology and paying bills, and it's really essential to their life. So it makes sense that on the financial side, that would also be true. We also saw that homework works, and that a coach assigning someone to sign up for an app or helping them to sign up and then asking them to explore the features was helpful to folks and helped them to monitor progress, especially in terms of things like credit, where you do a task and it takes a long time to see an increase, and maybe you're working with someone for a few months or for as long as a year or longer. And in that time, it's easier for the client to see their progress, and it doesn't require the coach to pull a credit report every time. They can get an update that, hey, my score went up 7 points. And the coach is kind of nudging folks around like, hey, if you get an update from this app, give me a call or shoot me a text. That kind of thing, like, planted a seed that helped folks to follow back up, to give coaches updates, and sometimes helped us to get outcomes that were valuable for funders, but other times allowed us to just kind of know what was happening in client lives and allowed them to be proactive in reaching out to us. And then I said this a few times already, but just know that, again, financial apps are not for everybody. And some folks said that they signed up for an app, tried it a few times, and then participation kind of petered off. Or in some cases, folks tried it, didn't use it at all after the client meeting, but then came into the meeting and then wanted to ask a few more questions about it. So again, it's important to kind of find something that will work for your clients. We're going to talk a bit about the specific apps in just a little bit, but I wanted to kind of point out this chart. And it really just highlights the things that we saw, that we highlighted in the last slide. The Mint was the most popular. Kind of the credit and budget tracking apps were the ones that kind of rose to the top. There also was an area, also bill tracking was popular for our clients, and we'll talk a bit about what these individual apps were in just a little bit. But those are the things to kind of keep in mind. We also covered savings apps, savings and debt payment apps as well, and we'll talk a bit about those in just a second.
All right, so before we go through the apps, we wanted to kind of go over the need to knows. So understanding that for a majority of these apps, they are owned by for-profit companies. And I think that's just something to be aware of, and knowing that there is some type of profit gain. And there's a variety of different ways that apps and app developers are able to do that. Many of the apps that are, and especially the ones that we recommend, are using some type of bank level security. So they should be just as secure as online banking. They all will require a login with account information. A majority of the apps are free, or could be free to download. Then there's some known as the freemium apps, where yes, they are free just to download, but once you begin to use certain features, it may involve a cost. So we always are letting our clients be aware of which, what features you're going to take advantage of, or take, maybe implement in your financial literacy. Be aware that, there may be a tied cost there. Another big thing, and so we always recommend to review the terms and conditions, and we know that is easier said than done, depending on how long the terms and conditions are, but it's just always a good, at least looking for if they have fees or for different aspects of that you're looking for, like security and whatnot. Connected to that, many of the apps will make recommendations. If anyone here has Credit Karma, you'll see it always offers like, oh, you have a high probability to, apply for this credit card. And we always let our clients know that just because it makes a recommendation, that is not a guarantee. So again, a fair amount of education needs to happen before you kind of let a client kind of go crazy with an app. So just because you've been pre-approved, that doesn't mean you're approved. That again, once you apply, it will do a hard pull or credit pull for most of those features. But again, that's the way that that's just the way that advertisement that these app fintech organizations are able to build revenue. So making aware that those ads are on there, and that's how the companies make money. We encourage clients to reach out when they receive a positive or negative update. Like as Darren mentioned, it's always, again, it's either the small win or we take it as a learning lesson. If, you reviewed your credit and did a pull, and, so be careful when you're applying for a credit card or something like that, how it can affect you. Apps change and are bought out all the time. Two of my favorite apps that I've loved for a long time are now gone. And it's so sad. So actually one of them was Simple Bank, which used to be headquartered up in Portland, Oregon. Sadly, were bought out by BBVA and then they were closed down. That was one of my favorites, and I've been with them for a long time. But again, the idea is that things are always changing, and fintech companies will get bought out by some of the big establishment companies, and hopefully they'd build it and try to improve on it, or they'll just buy it out and then just remove it from the market. And sometimes it's sad, but just to be aware that change is always happening, and then always research apps before using with clients, whether it's going online, whether you have the opportunity to review the terms and conditions, or if you're able to make a connection with whether a developer or some employee from the entity. I think those are some different ways. And then know that all of the apps that we're recommending today or going to talk about are available on Apple via iOS or Android for Google devices. And again, repeating that there's so many different apps that we've recommended in the past, but then have to stop using. Another one of my favorites was Ready for Zero, which was a app that would help you it's similar to SmartPay, which would help you kind of figure out your debt timeline and whether you do a debt snowball or debt avalanche, how long it would take to pay off all your credit card debts. It was really kind of like that, giving you that light at the end of the tunnel. If you create this plan and you follow through, this is when you'd be debt free. I know Darren had a huge affinity for Level Money, which was also a app we had to say goodbye. And then some just don't really fit in with our clients. So Personal Capital, I feel, is an app that actually is still around. And I think it's just meant for people who are more middle to upper income earners, because it's really looking at your whole portfolio, even looking at investments. And it just didn't mesh well with the clients that we serve. So again, knowing which apps are fit for your community, your environment, those that you serve is really important, because we learned that although that was an app that was out there, it wasn't necessarily meant for our communities.
All right, perfect. So I'm going to dive in now to some of the apps that we have seen were useful to our clients. And yeah, highlighting Chris's, not everything is right for everyone. So we take some things off the list. Keep in mind that this is updated. We update this presentation every time we give it. And typically you're having conversations every few months to kind of say like, what do you think about this app? Has it been working well for you? Have you seen any changes? So Mint is one that changes. I feel like they, for a period, were very, very static, and recently have done some kind of user updates to make things more friendly. And kind of a refresh to make things kind of more customer friendly. But for a long time, Mint was the same and kind of was static. And because of that, I feel like Mint was very popular to be used by clients, but I won't say that I won't say that everyone loved it. There was kind of like a higher barrier to entry to understanding how to set it up, how to set up recurring expenses and transactions so that Mint could recognize them easily. It required a bit more manual work than I feel like some clients wanted to do. And with a recent refresh that they've done, I think it's gotten a little bit better and a little bit easier to use. But so for those that don't know, Mint is a budgeting app. And I feel like they're kind of like the app that kind of made financial apps really, really popular and really, really mainstream. In particular, in the areas of budgeting, goal setting, and then later on, they added in features for credit monitoring and additional things as well. But this is kind of become, Mint is like probably the most popular on the list, although Credit Karma may have usurped them when we get to the credit section. And we still believe that it's a good app for clients that do like to track their money online. And there are numerous budget and credit apps like that we're also evaluating. Clarity is one. Oh man, there's a really good one that I've started to use now. But when we get towards the end of the presentation, we're going to also talk to you all about the ones that we're currently vetting. But for now, Mint is one of the ones at the top. In addition to that, so Mint works really well as an individual. Couples can share it as well. But we like the idea of Honeydew because for anyone that's done financial coaching or counseling with a couple, it's always a little bit different than doing it for an individual. And Honeydew is an app that allows couples to track bills, assign expenses, and really work together on their finances in a way that most apps don't cater to two people using it at the same time. So we just thought that like had a little bit of utility. And although many of our clients are single parents, for those that are couples, they said that Honeydew worked really well for them and continues to be valuable. And we had a third app that we used to highlight on this slide, and recently I've switched it to just kind of highlight banking apps more broadly, because since Mint has been around and since apps have kind of been developed, many banks have also realized that their clients and customers want these features and have been building in some of those features into their apps. Just wanted to kind of point out that if your customer is banking with someone, especially if it's a larger institution, they may have some features available that speak to budgeting, that speak to tracking spending and making it easier to know where your money is going and where it's gone in the past. All right, so on the bill pay front, so there actually are more bill pay apps than ever as well. But one of the ones that was on the list a long time ago and so still continues to stay on the list is Prism. So Prism is an app focused on bill pay, and it helps folks to get notifications about when their bills are due. So typically you get a heads up, I think it's about 7 days before and then 2 days before if you haven't paid it, that your bill is coming up and you can pay it. And you can either pay it through Prism, and if you pay with your bank account or a debit card, if you pay with your bank account, it's free. You can pay through them for free, but if you pay with a debit card or credit card, they charge you a fee. But the way that I actually encourage my clients to use this is to set this up just for the notifications. So you'll get the notification. The notifications are free. You'll get it 7 days and 2 days before. And it's just a nice, gentle reminder that, hey, heads up, your bill's coming up. You're busy. You have kids to take care of. This is just one more thing for you to look at the end of the day as a reminder that your bill is coming and it's due. And again, this is actually slightly outdated. Apologies, y'all. There are fees in the current version if you use a credit card or debit card.
All right, so for the next ones we're going to talk about are savings and goal planning. So Capital is one of my favorites, and what I loved about it is it lets you to create micro savings goals, and you can create some fun and custom rules. I'm not sure if it was maybe confusing apps, but there were some apps out there where you're able to tie, let's say your favorite sports team, wins a game. Let's say for y'all out there, if the Mariners win a game, then it would take some, like you could set up where 50 cents would go from your checking into your savings account. Or you could create, it's called IFTTT, if this, then that rules. So if, so let's say if a certain team wins, then it's going to put some money from your checking into. We have to make sure and clarify is like, oh, it's money from someone else. And it was like, no, it's going from your checking into your savings, but building some different habits. The roundup, which we've seen, keep the change from Bank of America. I feel like every bank has a different phrase for it, but where they round up and then that roundup goes directly into there, or to set up monthly contributions. I actually one time tied it to my on my iPhone to my health app. And so whenever I, achieved a certain goal, whether it was making sure I had this many steps in a day or that I achieved burning this many calories, it would move $1 or $2 from my checking or from my main banking account into the Capital app. At the beginning, Capital did not have any fees associated with it at all. I think a lot of apps will do that when they first launch. They need to build a user base. And so it'll be usually discounted or free. But then as time goes on, again, as we mentioned, these are for-profit entities, so they need to begin building some type of revenue. And so now Capital does have a tiered pricing system where there's a basic and then an intermediate and then like a top tier level where there are monthly fees. So with the top tier, you can do some investing with the app. But I think in more of using it as a savings platform and kind of tying those cool custom rules that you can kind of tie in to make the savings more entertaining. It's almost like gamification of savings. If you gamify it, then your clients and participants are maybe more willing to interact with it. Another one is Smartypig. Smartypig has been around for a long time. It has had a couple of different owners. I want to say now Sally Mae is the current owner of Smartypig, but it's an online piggy bank for people saving for specific financial goals. Very similar to Capital in certain ways. In other ways, it's not, because I don't know if it has the same rule features that Capital has, but it is absolutely free. And then one of the things to just be aware of is that both accounts in both of these apps are all FDIC insured, which is something that we always look for in any type of banking app, but to make sure that they have that FDIC or the NCUA insurance to make sure that funds are protected for depositors.
Yeah, and if I could add something here really quickly, Smartypig is really nice because it's all the savings is tied to a goal. So you'll set your goal of, I'd like to save this much money by this time, saving this amount every week or month or whatever interval the client says. And then from there, there's a calculate button where you can say, great, if to do that, it's going to take you this long, or you've got to contribute this much. And I feel like clients typically are like, I want to save this much, no problem. But then when they think about like, oh, every 2 weeks, I'm going to have to pull out automatically this much money, sometimes can be like a nice wake up call. You got kind of ask them like, how much do you think it's going to, can you afford this much every month? They'll say like, yeah. And then if they think about automating it, they kind of pause and say like, oh, maybe actually I'd love to automate it, but let's do a smaller amount I'm more comfortable with. And then I can move a little extra over where it happens. So we're big advocates for advocating or for automating savings. Like research says, and we've seen with our clients, that those who are able to automate, even if it's a very, very small amount, are able to generate a greater amount of savings than those that don't. So just wanted to add that in. I'll go on to the next slide.
Another savings app, which again, I was an early adopter and I was a huge fan of, was Digit. It was great because it was more at first it was just texting, and it kind of would give you like nudges and advice and reminders. So every few days it would it would kind of move money from your checking account over to the Digit savings account based on your spending habits. And their whole belief is that our algorithm is so accurate that even if you were to ever get an overdraft, they would cover the fee. I'm not sure if these days they're still doing that. But they have since then added a charge of $2 a month. And so that was kind of one of the first apps that really helped me begin to build savings for me. And then again, at the time when we were doing the project, we had a couple of clients also who enjoyed using it because it helped them kind of, again, automate the savings, taking these small amounts that the algorithm believed would not impact the client's finances from a day-to-day aspect. I mean, less than $1. For me, it was always less than $1. And you could also set a maximum. Say, look, every time you move something, just make sure it's never over $2. You can always set the maximum transfer amount. So it based on your spending habits, it would know how much to move over. And so my thing is I don't like the fee-based ones, especially for when we're looking at LMI clients. So I would now refer probably Smartypig as the top one of these, but it's also one that we've assessed, and we also want to share what we've recommended in the past. So.
And if I'll add to that, there sometimes can be a nice thing to do for clients who are just like, I don't know how much I can save, or I can't save at all. Maybe they do use something like Digit for 2 months or 3 months, kind of see how much it pulls out automatically, and are like, oh wow, I was able to do that. And then they can cut off the service, switch over to Smartypig, automate that amount of savings, and they get kind of like the learnings from Digit, but the no cost of Smartypig, which is nice.
Mm-hmm. And then for credit, so there are a variety of ones. I'm sure most popular that many have heard of is Credit Karma. It gives you access to free reports and scores from Equifax and TransUnion, so 2 of the 3 major credit bureaus. The big thing to be aware of, though, is that it's not providing your FICO score, but it is providing the Vantage score. And so understanding that the Vantage score is kind of a ballpark is within the ballpark of the FICO score. It's not going to be the exact score. We let our clients know this is not the score that banks are necessarily going to use, because it's not. They're still the traditional FICO score is what's used when making big, large credit decisions. But in the idea of having a free app that can at least let you know where your credit's at, and then it gives you grades for all the major aspects of credit. So, are you paying on time? Are you staying below 30% of your credit limit? Have you had any hard or soft credit pulls in the past 2 years? And it'll give you grades. One of the things, there's another one called Credit Sesame. And so it was a freemium tool as well that used TransUnion. A long time ago, what I liked about Credit Sesame that Credit Karma did not have was that it had a home purchasing power, where if you put what your income is, how much you've saved, what your credit is, they kind of tell you, okay, this is how much of a home you could buy. I guess they received feedback, because since then, Credit Karma has now had that, implemented that. And so there are some changes. The thing about Credit Karma, it is giving you 2 different scores. But I also love it gives some great tips and educational recommendations on Credit Karma, the alerts for those small wins. And then it provides you, it used to be once a week. Now it provides you daily updates on your credit report, if I remember correctly. And then one of the ones, again, because we want to get our clients to get a full picture. So if with Credit Karma, they're getting access to their TransUnion and Equifax, then they can download the Experian app to pull their Experian report. So they get a full credit picture. So it's very similar. A lot of educational resources on the Experian app, but the Experian app also gives you your FICO score, which is much more valuable. There also are some other features like Experian Boost, which I would hesitate to encourage to use with clients. The idea is that they're trying to make rental payments and other bill payments kind of tie into credit, which is great. And I think if we can get to that movement to where it affects a FICO score, that would be great for LMI communities. But the thing is, currently, it only affects your Vantage score. And it's just not many credit decisions are made using the Vantage score. And still, kind of FICO has the Fair Isaac Credit Organization still has like the not a monopoly, but they are the big credit deciding factor that banks and other financial institutions use to assess risk. So that's where I'm a little hesitant until we get to see more implementation of how rent and other bills and the way that families are using to pay those off to be able to report on reports, or to report that on credit reports to enhance their credit viability. But until it's being implemented with FICO score, I'm just a little hesitant with it. At least that's my perception. I don't know, Darren, if you have any other thoughts there.
Yeah, only thing I'll add to that is when we're doing coaching, we typically pull the FICO scores for folks. Yeah. So we typically give pull the FICO scores and then I'll let them know that they can also access their credit reports from annualcreditreport.com. But there's just a different utility to folks being able to track it on their own. And that's the real power of some of the credit apps. The kind of like inverse of that is sometimes folks can get a little too obsessed with tracking their credit, and it can become for some folks, it can be an unhealthy thing. So just letting clients know that sometimes it's best to like not check it every day. It's good to kind of like, maybe once a month you pop in there and check it, or turn off notifications, or, like whatever works best for you. But like I've seen where clients can take it to one extreme where they're checking it all the time. They're super concerned about it. When, typically it just takes time to see that improvement. All right, cool. So I'm going to talk to y'all a little bit about investing apps. And this is something that we've seen more and more, as you all, I'm sure, are very aware. Investing is more accessible than ever. And we think that's mostly a good thing. Investing is difficult. It's risky. So, clients typically are like, should I start investing? And we're like, so we're not investment advisors, so we can't give you advice on what you should pick in terms of your investment options. But it is good to, we can talk to you about education around investments and talk about what things mean. And then it's kind of up to you to make that choice. So we typically try to think of apps that won't let folks, the greatest risk comes from lack of diversification, which is a basic investing thing. So just kind of letting folks know that making diversified choices is likely the best option for you. So you want to do things that invest in ETFs or mutual funds or things that just don't let you choose one thing, whether that be a stock or anything else. And if you choose to do those things, that's fine. But again, we're not recommending any of that. And we're not making recommendations around investments. So Acorns is nice because it's really a micro investing app, and it lets folks invest their spare change. And when you get to kind of about $5, it'll make the investment for you. Based on your investment, you'll complete a survey, and it'll ask you about what risk you're interested in and all that. And we just thought that was nice. It's nice, it's simple, it's easier for folks to understand. The one caveat I'll say here is Acorns is expensive in relation to other investing apps because they charge $1 a month fee or the 0.25% fee. When you compare it to something like a Betterment almost always comes out ahead. So kind of letting folks know that this is a starting app, but this shouldn't be your whole plan or your only option, especially as you build savings and feel more comfortable. At some point, you should talk to someone who's more experienced at investing or consider using another app that will charge you a lower fee. So with that, I feel like this is the categories are kind of starter investing, which is kind of what Acorns is and what most of our clients have demand for. But then there also is the Betterments of the world where, Betterment, Ellevest, Wealthfront, where you can kind of do lots of investment options and have retirement options and all of that. And then I think what's become really popular, especially in kind of modern days, are the Robinhoods of the world, where folks know that you can, go and buy a portion of a stock or buy a whole stock if you want. We tend to tell our clients to do their best to stay away from those, at least until they can talk to someone else about that. But that's not our area of expertise. And then the one other thing I want to point out is a lot of cash transfer apps have gotten into investing lately, and that's made it more accessible, but also just something to let clients be aware of. So someone will say oh, I'm using Cash App or I'm using Venmo, and now I can invest through that. What do you think about that? And I think just like anything else, it's important to know that it's an investment. So there's some level of risk, so that if you will miss the money, then this maybe isn't the best thing for you to be doing at this time.
And just to add on really quick, I think again, it's been harped already, but just I think it deserves repetition, is that I think when working with our clients and our communities, this kind of falls into, these are the people who are getting closer to graduating from our services because, they've worked on their credit, they've worked on their budgeting, they've kind of put a lot of things in order. So that's when they begin to start kind of okay, now that I have this, this little collection of assets, what can I do to build it? And just the thing is, again, if we're not certified, if we're not a CFP or if we're not a CFA or some type of certified person or with a certification to provide investment recommendations, we provide some education, but we'll never make a recommendation for investments. And I recommend for you all out there to not do that, because that could hold you liable if something were to happen. So just make sure and be aware of that.
Yeah, for those that do want to give investment advice, Series 65 is where you want to start, but you'll keep on moving.
All right, and then so for banking apps, like I mentioned, I loved Simple, which was one that was around. So when they closed last year, I had to start hunting around. I've looked at Chime, which is another good one that's out there, but I've fallen recently in love with a new app called Envil, and so I definitely use Envil. Which is an online bank. And if you ever heard of a neobank or a challenger bank, these are pretty much the idea of fintech or entities kind of causing disruption in the banking world. So kind of understanding that maybe some of the big apps are not offering these different services where you can budget within the same app. So rather than having your traditional bank account and connecting it to Mint, somewhere like Envil is that you can do the budgeting within the same app where you do your banking. So and a lot of the neat features too, and I know a concern that I heard earlier with the native communities is with some of these online banks, they'll be connected to, let's say, the Allpoint network, ATM network, or the MoneyPass ATM network, which is a large ATM network that you can go to CVS's, Walgreens, gas stations, grocery stores. And so that makes it more accessible when you can't find a brick and mortar banking location where you're able to withdraw funds free of charge. So in one way that does make it accessible, but then the other challenge is when you're getting paid in cash or if you're receiving cash, it makes it very difficult to deposit because the only way to really deposit with some of these banks is either through direct deposit from an employer or service provider, or that you'd have to then get a check or a money order in order to make that deposit. So just understanding that there are benefits and drawbacks to these, and making a note of that. And then we also recommend our large banks have just begun to grow with their apps. So as these larger institutions have noticed, okay, people want these features, banks have started to implement it. So if it's US Bank, if it's Bank of America, if it's TD, whoever it is, look and see how your bank, and look at their app, review it, see what features that they have, and maybe they are now meeting your needs. So be aware of that.
Great. So I'm going to chat. We're almost at the end of our apps, but I'm going to chat about an app that I am very biasedly a fan of. So I do work with an organization called Propel, and I work in the government team there. And part of what I do is to manage all of the benefit update information for this app called Providers. So Providers is formerly known as Fresh EBT, and it helps families to manage their SNAP benefits, balances, to know what's coming, what the transactions are, to know, to kind of like plan ahead. And we've seen research that points out that folks using the Providers app typically can make their SNAP benefits last for 2 to 3 days longer, which may not seem like a long amount, but over the course of a month, every little bit kind of helps. So the planning and being able to plan ahead using the app is really, really helpful to folks. In addition to that, the balance tracking, I think, is probably the most popular feature, but the second most popular feature is these kind of benefit updates. So during the pandemic, we've been really like checking and sleuthing and looking around with states to see, are they providing extra SNAP benefits because of COVID-19? Are they when is the child tax credit kind of come out, and when can folks expect it? And if folks don't get it, what can they do to receive it for the first time, to get those back payments, to have it go to the place where they would like for it to go to? Kind of giving mini benefit updates and letting folks know that LIHEAP is available in their area, and that there's water assistance is coming soon, but not available in most areas yet. So it's meant to serve as like a hub for really tracking all your benefits in one place. And very recently, Providers has implemented a debit card feature, and with the idea with the thinking of, we don't want folks just to be able to track their EBT benefits, but to be able to track any of their cash benefits. So whether that be the child tax credit, whether that be SSI, whether that be tax refunds, unemployment checks, folks can have all of this live in one place and have it be central, track their food stamps and their cash benefits in one easy go. So Providers is an app that's in particular built for folks that are SNAP households, and because of that, we typically come from the lens of, we're trying to help low-income folks, and we want our language and things that are available in the app to be catered to them. And I think that's a little bit different than most of the apps that we've highlighted so far. Providers doesn't have, the app is free and we make our revenue from ad revenue, but we have an ads team of a few folks that look through every individual ad. There's no Google AdSense or any way for things to get in the app other than a human reviewing it, saying this isn't risky for low-income populations, and then kind of approving the ad and getting the language up. But there's around 5 million folks that use Providers every month, and that's grown a bit during the pandemic. So all this to say, trying to be one good resource for folks that are low income and receiving SNAP and other benefits to come in and manage those benefits.
Really quick, I'm just going to talk about a couple of different other apps. So IRS To Go is a great app to recommend, especially if anyone here is in the VITA world and volunteer tax preparation. It's a great app that I recommend to tax clients when they're like, oh, I want to know when my refund's coming in. And so you can download the app and go to check your refund status. You can also find VITA sites through there. and it's available in both English and Spanish. Everlance for again, tying to taxes. We all have those self-employed workers, or let's say they're not doing Uber or Lyft as rideshare because they have apps that track that for them. But Everlance is a great to be able to take pictures of receipts, and they can be stored in the app for then later on when it's needed for tax time. And you can do mileage tracking. Now, the mileage tracking would have to be manually entered in the free version, but there is a premium version where it will do automatic mileage tracking. So again, if the client kind of would rather be, just totally hands off and let the phone do all the work, that it may be a cost that they're willing to take for that. But Everlance is something that our organization uses. Organizations can also, or companies could pay to kind of cover the fee for their employees. So that's another thing that employers might want to look towards. Although with the pandemic, who knows how long we'll be without as much local travel, but I'm sure in the near future, it'll be up and running again. And so it may be a good app to use. And then the cash apps, Venmos of the world. So it connects to your bank and able to transfer funds. I think it's great. I think I would be wary of make sure that clients are aware that if they transfer funds from their bank account, it will be free. But if they try to transfer funds from their credit card, there will be a fee, and that it could also be treated as a cash advance from the credit card. So that may incur additional interest and fees. So be very wary that it's connected, make sure it's connected to a bank account. And then now they offer where you can get the transfer instantly. Let's say, a friend of mine, or let's say we split dinner and friends of mine, I paid with my credit card. They all Venmo'd me that. I could take it. I can request that to cash out and put it into my checking account instantly, but they're going to take a fee. So I'll just wait the 1 or 2 business days so I can get my full amount back. But then again, it depends on the client. If they need right away, they might want to take it out. But just be wary of there's the kind of secret, not secret, but the possible fees that come from different options on the app. Same thing with Cash App as well. And also both of them have now been opening up to crypto. And so that's another thing to be, very cautious about with our clients.
Great. So I mentioned this before, but we're always kind of looking at apps that we might explore in the future and we might not. So I've listed a few of those here, and these are apps that have potential or don't have potential, or we are not on our recommendation list yet, but we're kind of looking into. And I'll highlight like 2 or 3 of them really quickly. eSusu helps folks turn rental reporting, put rent reporting for leases onto their credit reports. FinHabits in particular focuses on Spanish speakers and is kind of an intro investment app. But any of these are worth exploring and seeing if they may be great for you and your clients, but we're not ready to talk to our clients about them just yet. In addition to that, you all will get the presentation after the fact, but we've got links to all of the folks that we do recommend here. Oh, sorry, Chris, this is your slide. My bad.
Oh, it's okay.
All right, rolling through so we can get to the questions, y'all. Yeah. All right, so a few important things to keep in mind as you're looking for how to find these apps and how we found them. So there is a Robinhood Foundation has a project called Blue Ridge Labs where they work with startups to create financial apps. Providers and Propel came out of that. And oftentimes they're particularly focused on low-income things that will serve New Yorkers, but they often expand beyond the market of New York. So Robinhood Labs is a great place to look. The Financial Solutions Lab by the Financial Health Network does a good job of looking at things that are serving nationally and typically are established apps that serve clients already. Ideas 42 has something called Ventures for Shared Prosperity, where they're creating technology-based startups that are working to focus on local populations. And honestly, I would just ask your clients what they use and what works well for them. And I put a quick note in here about crypto. And really, so because clients will start to ask you about it, like, oh, what's the deal with Dogecoin or Doggycoin? And, I heard about this and so made all this money off this. We typically say that it's an investment product and, it's a bit beyond our scope, but I would be very cautious. And if you think that you'll miss the money, then again, I would be very hesitant about using it. All right, so last slide before we get to questions. So as Chris mentioned earlier, we were talking about kind of vetting apps, and sometimes that meant we're talking to founders and CEOs. And some questions that typically ask app companies if you're talking with them, or even other employees at app companies is what's your runway, which really just means how long can your app survive if you were to run out of funding today. If they're saying something like 3 months, that's maybe not a good sign. They're saying something like a year to 2 years, and you know that they're much more stable and likely will be around. And in that amount of time, they likely can raise funding if they need to, or generate more ad revenue, or whatever else it may be. Another really, really important question, especially in these times, is privacy and security. So how do you make sure private client information is private and secure? What safeguards are you taking? So for example, at Propel, we typically don't, we keep track of as little client information as we can, because we just figure it's something for us not to keep track of. So on the food stamp side, we actually have very little information about folks, and most of the information we do get, it comes from surveys. On the debit side, we have to keep a bit more information because of KYC. But even then, we try to minimize what we're collecting from clients, just to protect them. In addition to that, how do apps make money? Maybe ad revenue, it may be recommending products, but what's the strategy for making money? What's your target market? Are they working with low-income populations like the ones you're working with, or other populations? Do they have future plans for their app or product? And sometimes folks will be, like, between us, here's what we're thinking about for the future, which can be really nice and can help you kind of plan for making changes to any app resources you develop or share with your clients. And then it also is nice to ask sometimes, like, is there a value I can bring to you? So that way it's not just, if it's telling them about the client experience and what folks are seeing from them with their app. So like with providers, we've got a few social workers who work with SNAP households who will say, like, this is great, but folks gave me some feedback on this one thing, and then we'll pass that on to the engineers to make an update, or if there are small changes, it can sometimes be helpful for us. With that, we want to leave a few minutes for questions for you all. I believe Becky's going to come on and
there we go. Now I'm not muted, so you can hear me too. That's always helpful. That was fantastic. That was so much information, and I don't know if you guys can see the jam boards, but they are filled with information and people asking questions and people making comments and talking about how do you get your free credit score or credit report, and back and forth on that too. So that's awesome. I wanted to start. I'm not sure whether I should start on which end of the spectrum I should start, but I'm going to go with, I think, first thing, the last slide you really talked about in terms of, data protection, privacy, that kind of thing. So for a lot of us, we're serving clients and we know, this is the future, fintech and that, but we have clients who may be resistant, and then or just not, they're not interested, which is fine too. But how do we talk to them, or how can we evaluate an app's like security, or help them evaluate an app's security, or what that app does or that company does with their personal information?
Yeah, so good question. And most apps will say they use bank level security. Most apps won't say what they do with client data. So in my experience, things are pretty safe and secure. Bank level security hasn't ever been taken advantage of so far that we know of, and hopefully it never will be. But at the same time, you typically get those, like, how do you use client data questions from talking with the folks that own the app. So from there, you typically want to connect with a human, which can be hard to do because most apps make it difficult to find a human. So sometimes it can be like finding someone on LinkedIn and messaging them and saying what you do and what your customers are, and maybe they'll respond and maybe they won't. Or having a friend of a friend who works at a place. I feel like I've mostly made my connections with app developers by attending local things in Miami and New York. And since that's happening less in the pandemic, it's harder, but still possible virtually.
Go ahead, Chris. Sorry.
I was going to say the other thing too, which it is difficult to do, and because I've tried, but the other thing is to review the terms and conditions. But the thing is, there'll be depending on the app, they'll be tricky in like where they're embedding it in the terms and conditions. And they'll keep it very general, so that it's less specific to see where they're using it. But I mean, again, it's a give and take in understanding, is the benefit of the app outweighing the some of the challenges and some of the risks with the data. So it's definitely having to do your research. So.
Okay, that sounds good. And we all know now that we have both you and Darren as resources for us for what are good apps and what might not be the best apps. So the flip side of that, is, what can we do to encourage people's participation or build their capacity really in using fintech or using financial apps if they're not used to it or are very wary of it, but it could be a benefit.
Yeah, so we tried to say, let's show you this app. So typically, like, the coach will have the app on their phone. If they feel comfortable, they can show them their version of the app and kind of let folks decide for themselves if they want to use it. We found that works very well. But for some clients, this just isn't for them, and that's okay. So I think when you bring up like the possibility of using apps, folks kind of reveal pretty quickly whether they're interested or not. And if they're not, you travel off the topic, and it's fine. And if they are, then you explore it a little bit more.
Yeah. Do you feel like people will get left behind if they don't, use some apps at some point in time?
I don't think left behind, but I do think that like my mom doesn't pay any of her bills online, and I don't think that that's bad. But I think that she like drives to the credit union, drops off the payment, and that's okay. It's just like apps can provide a convenience. So telling people about the time saving or the cost saving or the things that they get from not having to come to your office to ask for a credit score update might be worth their time. And kind of selling it that way can be valuable to folks.
Yeah, for me, I would say my grandma still does envelope budgeting, which is kind of, the paper envelope, putting the cash in, and I use Envel, which is the digital version of that. And so, but on the Jamboard, I saw a comment that there with a lot of stars on it, and I think it's so true. Coach confidence improves client confidence. So I think we as those in those fields, we need to be comfortable ourselves first. So it involves us experimenting with it, learning the ins and outs of the app before we and get comfortable ourselves as practitioners before we implement it with our clients.
That's awesome. Thank you. And that is very true. Do you think we have a question here? I want to make sure we ask this one too. The credit reporting apps, things that work for ITIN holders. Do you have any knowledge or recommendations on services that would be beneficial there? I know you mentioned one maybe for Hispanic speaking or Spanish people.
FinHabits is one that involves in investing. From my recollection, I think with it is investing, but they have preset, so you can actually choose your risk level, and based on that, they have preset kind of investment plans based on your risk level. The thing is, I'm trying to remember, and I think you can use an ITIN, and I know more credit products are opening more and more to ITIN number users, but I think that the key thing is having that ITIN number. I don't know, Darren, if you want to build upon that.
Yeah, I think FinHabits does allow you to use an ITIN to sign up for at least some of their products. But I think that's what I would do is kind of keep a list internally of things that work for ITIN holders. So like any of the budgeting apps are going to be fine. Credit apps are where it's going to be like a bit more shaky, and I think we're also a little less confident in saying whether they work for them or not.
Okay, that makes sense, and that's fair too. Credit that was really the specific question was around credit apps. Are there some of your like absolute favorite apps that you would recommend in our last minute here? Maybe.
Yeah, I'll go with, I'm ultra biased because I work at the app to develop the benefits hub that tells people about benefit updates, but I think Providers is great. And beyond that, like personally, Prism is probably the most useful app to me. Like I got a new phone recently, and when I switched over, I didn't update Prism, and I just fully didn't pay my bills for a month. Like I was like, oh, the notifications have been so helpful to me for so many years that I just didn't realize how much I really depended on it. So those two for me are really stand out.
Awesome.
For me, I would say I've always been a fan of Credit Karma. I'll just say be hesitant about the ads. Don't just because they say, oh, you're highly expected to be approved for this card doesn't guarantee it. So and understand that's how they make money. But I just love being able to, again, have that update with your credit. But again, don't let it turn into where it takes over your life as Darren mentioned, where with some of our clients, it's like they're on it every day, seeing how it's improved. But I just think I just remember, 10 years ago, it was difficult to find your credit score. And now it's made so easy. And on the Jamboard, someone made a comment about where you can get so for free reports, you can also go to annualcreditreport.com and pull your one free annual report, but they're not giving you the scores. So perfect. I would recommend, again, the ones we reviewed for the scores, but also be aware, as we mentioned, the Vantage score versus the FICO score, which the Vantage score is in the ballpark of the FICO score, but it's not exactly it. So, also be aware of that. And because I know clients will come and say, well, why is my TransUnion score on this app different from the TransUnion score that you provided me? Well, ours is the FICO score that we provided you. The app is providing you a scoring module. Similar, but a little different.
Different. Yeah, absolutely. Well, you know what? Thank you guys so much for being here and for all of this information and all of the apps. I can't wait to take a look at the slideshow just in itself. I mean, that is really exciting. So, like I said, I appreciate your time and coming here and sharing this with us and your expertise and all the work you've done in the background to get us to this point. It's really appreciated.
Well, thank you for the opportunity. We're glad to be here.
Awesome. I'm going to hand it over to Jared and Ryan, I believe.
Awesome. Thank you so much to our fantastic presenters, Darren and Chris. I think I picked up more in that little segment there that I'm going to just stick in my back pocket and pull out hopefully sometime in the future. Also, big thank you to Bank of America for bringing that section to us. I have a long list of apps that y'all just mentioned that I think I'm going to pull an afternoon looking through them. So thank you very, very much. Jared, I'm interested in your thoughts. I know we both work with participants who fill the range of technological comfort. So give me a little bit of your thoughts.
Yeah, really great presentation, and really brought it together, I think, for part of what we're trying to accomplish here at the forum. And just looking at the Jamboard and looking at the comments and Spondulix, lots of people are engaged with this because there's so much uncertainty and the landscape shifts so quickly, like they said. I posted a little a link to a New York Times article about kind of the digital divide, and it's not as clear as it might seem that older folks don't like technology and younger folks love it, because sometimes younger folks might like technology, but they don't have a lot of financial literacy. So where does that come together? But really interesting presentation. I too am really interested in taking notes there to see what I can use in my everyday practice. So really great. All right, so we'll jump to break. We'll be back in about 10 minutes. We're going to start at, let's see, about 11:12. About 10 minutes, jump back on for our panel to take us out.
welcome back, everybody. I hope you had a good break where everyone's rested, relaxed, refreshed. Since that was our last break of the day, I have to give massive thank yous to whoever is behind the music. I've been jamming during my coffee breaks over the last 2 days. Thank you to all of our sponsors. Thank you to everybody who put this all together. I have to say, some of the best break time music that I've heard in quite a while, and I guess I just haven't been paying attention. Thanks, everybody. Jared, what's next?
All right, thanks, Ryan. So we're going to conclude the forum and today with a very interesting panel, bringing it all together for us, all the different perspectives we heard over the past couple of days. The panel is going to focus on the future of financial technology, research, pitfalls, and possibilities. And we will have 3 folks on the panel. We'll have Edwin Reeves from the FDIC in the San Francisco region. Edwin is a community affairs specialist with the FDIC in San Francisco regional office since 2015. He helps community stakeholders bolster the economic inclusion of low-income communities in the Bay Area, Oregon, and Washington. He has over 30 years of experience supporting community development that creates and implements programming for small businesses, nonprofits, and residents in low-income communities.
Erwin is joined by 3 panelists, the first of which is Sean Creehan. Sean is the Fintech team lead for financial health and inclusion at the Federal Reserve Bank of San Francisco. He heads efforts to embed financial health as a first principle in the Fed's assessment of new technology. During the COVID-19 crisis, he led a team of economists, bank supervisors, and community development specialists that innovated policy supports for small businesses. Sean previously worked as an economist with the San Francisco Fed's Country Analysis Unit, where he researched innovative uses of policy and technology to build inclusive financial systems in Asia, and advised the San Francisco Fed's Management Committee before joining the Fed. Before joining the Fed, Sean worked as a management consultant to companies operating and investing in Asia. Thank you very much for joining us, Sean.
And we also have Gosia Tomaszewska. Gosia is director at Commonwealth, where she leads the lab team, focusing on design and testing of new and useful human-centered solutions to lead the transformation of the financial services field to create a stronger and more prosperous society where everyone has financial opportunity. Gosia brings over 10 years of experience in the field with specific expertise in cross-sector partnership development, capacity building, project management, and stakeholder engagement. She's passionate about developing successful collaborations to change and improve systems. Prior to joining Commonwealth, Gosia worked at the state and municipal levels in the financial empowerment and asset building field to create innovative programs, solutions, and policies to improve existing systems. Most recently, she scaled the City of Boston's Children's Savings Program, Boston Saves, to include all of the Boston public schools. She holds a graduate certificate in politics and public policy from the University of Massachusetts, Boston, a master's in European studies from Jagiellon University, and psychology and human history from Douglas College of Rutgers University.
And last but certainly not least, they are joined by Katie Neal. Katie Neal leads outreach and advocacy efforts for Plaid's policy team. This includes working with policymakers, regulators, advocacy groups, and customers to navigate the regulatory landscape to improve financial offerings for consumers. Prior to joining Plaid, Katie worked on education and tax policy for 2 Senate committees. She holds a bachelor's from the University of Virginia and an MBA from UT Austin, where she led the Net Impact Organization and MBA Impact Investing Training Network. She currently resides in New York City. And I'd like to remind all of our participants joining today that you can read full participant bios and learn more about their awesome work at the Bank On website, where you can find the Bank On program, bankonwashington.org. Thank you, everybody, for joining us. And Erwin, take us away.
Good morning. Thank you, Ryan and Jared, for the introduction. As mentioned, I'm Erwin Reeves, and I'll be moderating our closing panel today, The Future of Fintech, research, pitfalls, and possibilities. Next slide. The technology of the mid-1800s, while very simple, helped advance our ability to communicate across a broader space in a short amount of time. When our devices improved, so did our capacity to enhance communication. In order to further increase our capabilities, we initially needed larger devices, but this also required special skills. And frankly, the improvements were not readily available for everyone. Ultimately, technology began to slowly shift and increase access to financial services for everyday consumers. Personal computers changed the landscape and fundamentally accelerated the intersection of technology and financial services. The convergence of financial services and technology provides access to a vast array of resources. Our panelists will provide us with their insights on the future of fintech, research, pitfalls, and possibilities. Please join me in welcoming our panelists. Katie, please introduce yourself.
Hi, everyone. I'm Katie, and as mentioned, I lead outreach and advocacy efforts for Plaid. And I'm very excited to talk to everyone today. We recently released our 2021 FinTech report with the Harris Group, so I'm very excited to talk through some of those findings as well. Looking forward to engaging with everyone today.
Yes, next, Sean, please introduce yourself.
Good morning, everyone. Thanks, Erwin. Thank you to the Bank on Forum team for having us today. My name is Sean Creehan. As mentioned, I'm the lead for financial health and inclusion on the SF Fed FinTech team. So I lead our work trying to embed the concept of financial health as a first principle in the Fed's assessment of new technology in a variety of areas. Before I begin, I have to acknowledge that my remarks today reflect my own personal opinion and not necessarily those of the SF Fed or the Federal Reserve System. So I can get into more of what our work is maybe during questioning, but we sit within the Division of Supervision and Credit within the SF Fed and our Center of Expertise and Excellence on the transformational impact of technology on the banking and financial system more broadly.
Great, thank you, Sean. And last but not least, Gosia.
Hi, everyone. How are you? Good to be here. My name is Gosia Tomaszewska, and as mentioned, I'm the director of the Innovation Lab at Commonwealth. And just to tell you a little bit about Commonwealth, it's an organization that's been around for 20 years and is a national nonprofit that's building financial security and opportunity for financially vulnerable people through innovation and partnerships, which that's why I'm in the Innovation Lab. And really, the organization overall focus is on working households living on low to moderate incomes, which, as we know, disproportionately includes women, BIPOC folks, and immigrants. And why I'm here, which might not have been clear from my long bio. Thanks for reading that, Jared. One of our sort of key areas is focused around tech for good. So really thinking about how we can help build technology from the ground up in a way that's accessible to people living on low to moderate incomes. You know, how can we get on the ground level to make these tools reflect the needs and wants of these groups, whether it's, financial apps, AI, or blockchain. And, to do that, we collaborate with a lot of fintechs in the ecosystem on research and design, and that includes Plaid. So I'm happy to be here with Katie.
Great. So with that, Gosia, I'd like to just kind of lead into our first question, and it's two-part, but you've kind of started down the path. The first component is, where is fintech headed? And then really, what is the research telling us about the promising practices?
Right. So I'm happy to talk a little about the research. And I'm guessing this is not a surprise to anyone here, that the way people use financial services has changed dramatically during the pandemic. And we as an organization really wanted to understand specifically what these changes look like for people living on low and moderate incomes, because that's sort of our focus. And so actually in the last several months, as I mentioned, we released two different reports related to the role of fintechs in creating inclusion. One of them was closing the fintech gap, the fintech inclusion gap, which was the report with Plaid. And the second one was around emerging technology for all. I think I would say the biggest takeaway from the report with Plaid is there's clearly an opportunity across demographic and socioeconomic groups for fintechs to build trusted products and to help consumers meet their financial needs. But I think without frequently monitoring and requests for feedback across those different groups, fintechs are at a risk of not realizing that opportunity. Although I'm sure Katie will be speaking more about the research and the broader report, which includes a lot more data. So I'll just sort of dive in for a second into the other report, which is Emerging Technology for All, and really looking at banking sort of trends and more specifically some information around conversational AI. So Commonwealth actually, which I think it's funny, it's like we were thinking the pandemic is coming. We did some research on before the pandemic and the fall of 2019 around the use of technology in low and moderate income communities. And then once the pandemic started, we were like, okay, let's see, what is the change? So we conducted another nationally representative survey during COVID in early 2021, actually, so early this year, to look at the needs and wants of financially vulnerable people. And the results were quite compelling. Maybe not surprising, Erwin, but still sort of definitely blew our minds in the sense that 38% of respondents, and these were all people earning under 60,000, and women, people of color were overrepresented in the survey. So that was our sort of target market. And 38% of respondents reported that they have changed the way they bank in response to the pandemic. And what's more, individuals who also experience financial hardship were 4.5 times more likely to have changed how they bank. And one quick stat from the other research with Plaid is that 59% of Americans use more apps to manage money now than they before COVID. So again, it's clear that COVID forced many Americans to change the way they bank. As bank branches close, we found that now that they have been pushed to make the switch, they sort of planned and intend to continue doing so. So yeah, again, I think there is an opening opportunity here. It's a different sort of era that we're in now. So financial institutions, fintechs, and others, I think, need to continue to look at their products from the perspective of people living on low and moderate incomes, to make sure, as they're being developed, that they're more accessible, equitable, and through that more utilized. So sort of creating more users. So yeah, I could go deeper, but I'll leave it here for now, and I'm sure we'll dig in a little bit more later.
Great.
Yeah.
Now, Sean, your perspective, and give me just a second, Katie, because I really want to close with you on this particular question. Sean, as a bank regulator, it's, you're looking at some of the same information, but is there a different perspective that comes up related to the research that you all are doing related to fintech?
Sure. Thanks, Erwin, for the question. Yeah, certainly. I mean, where I sit within supervision and credit, we work with a lot of bank examiners, supervisors, policymakers, kind of at a higher 30,000 foot level. And a lot of what we worry about is, of course, risk, right? So what are the new risks that might be introduced by this technology from a safety and soundness perspective of a financial institution, kind of the system as a whole, broader financial stability, and then consumer protection, which is part of our mandate to make sure people that are using new technology are being served well and not being abused in any way. And there's a lot of people that work on all of these issues around the Federal Reserve and with our fellow regulators at the federal and state level. Where I come at this question, I consider myself an optimist, maybe a pragmatic optimist with a bit of skepticism on the downsides, but I really focus on the opportunities here of fintech. And I know we'll get into the risks as well in a bit, but from a basic level, the motivation of this conference, certainly from a basic inclusion and access perspective, Gosia was just talking about the massive digitization of all of our lives, economic, financial, during the past 2 years. But yeah, we've seen a tremendous amount of opportunity created there. But where we focus and why we lead with financial health and not inclusion is we're trying to get the mindset around the outcomes of financial service delivery and particularly when it comes from technology. So getting more specific about what we think financial services should be doing for everyone, whether that's timely, safe, fast access to wages or public benefits, ability to save and earn a market rate of return, access to credit and borrowing, the ability to plan for the near term and the future. These are all kind of concepts that I think connect to the concept of financial health. I know Gosia's organization talks about financial security, or you hear people speaking in terms of well-being. But these are all areas where I think there's both opportunity and downside in the use of new technology. So you have a lot more data, of course, that can track some of these metrics that we might be able to create around these indicators. A lot of kind of behavioral science informed product design may be able to encourage users to make decisions and kind of commit to a decision that maybe they understand the concept of saving more for the future or buying insurance or whatever it might be, but maybe they have trouble, there's stress in their daily life, there's not enough time, and so technology can help them with that. But of course, there's downsides. I mean, we saw with the meme trading events of earlier in the year in GameStop, I mean, there's a lot of companies out there that are promoting basic access and financial inclusion, but people that don't know how to use a complicated investment product may get sucked into day trading and margin trading and all of that. So there's all sorts of downsides as well. But kind of at a high level, where we come at it as bank supervisors, as the Federal Reserve central bankers, is of course, what are the risks? But where I like to kind of bring in the opportunity side is to the extent we can get more specific in measuring the positive outcomes. You know, it allows us in theory to kind of right size the whole basket of our risk assessment from again, that safety and soundness, financial stability and consumer protection angle. Is if you can say, hey, this new financial technology, this new innovation is creating these benefits for underincluded populations, then maybe we can say, okay, well, is our safety and soundness examination here, how is that impacting the delivery there? And just have like a more candid conversation about that and thinking holistically about the issues.
Thank you very much for that, Sean. Now, Katie, you've participated in some of the research, and your goal really as an organization is a little bit different than either of our other two. So I really want you to kind of enlighten our audience around kind of the perspective that you all had, but really looking into that, where you think fintech is headed. And we've talked about this a little bit, and what the research is telling you about how your organization is going to operate.
Yeah, thank you for that. So for those that don't know, Plaid connects about 11,000 financial institutions to about 5,500 fintechs. So if you've used a fintech, you've likely connected it through Plaid. You've seen that, for example, Venmo uses Plaid to link to your bank account. And we allow consumers to permission their financial data to a fintech of their choice to access a personalized service. And that's actually how I would categorize the first wave of fintech is personalization. So there's this notion of open banking, and open banking says that consumers own their bank account data. Dodd-Frank was passed after the financial crisis. There was a 75 words in it known as Dodd-Frank Section 1033, which said that consumers own their bank account data. And so Plaid was built about 10 years ago after the passing of this law, and allowing consumers to actually easily transport their data in order to access personalized services. So what we've seen is consumers getting access to real-time data to build personal financial management tools, to pay their friends, to pay bills, et cetera. But I do want to talk about where I think fintech is headed. So like I think of open banking as the first iteration of where fintech is, and that personalization being a key result there. And it's been huge, as Gosia pointed out. And during COVID, we actually saw that, I have some numbers here actually. So between 2020 and 2021, the proportion of US consumers using fintech grew from 58 to 88%, which is a 52% year over year increase. And that was, as we found this with the Harris survey. And we found that 82% of consumers said that this allowed them to track their finances more easily. And 4 and 5 said fintech gave them more choice that meets personal needs. So that fits in with this personalization idea that open banking allows for that. I do think the next wave of fintech is going to be more around open finance and automation. So open finance goes a step beyond open banking, and it says that consumers own all of their data, any data that can be used to make a financial decision in the consumer's life. And that means everything like payroll data, investments data, credit data, debt, student loans, mortgages, all of that data consumers should own and should be able to easily change, to reroute it, to transport it, to permission it elsewhere. And so I think this is going to foster a trend in automation. And Sean spoke a little bit about this when he talked about earned wage access. With this ability to access the broader scope of data and just share that broader scope of data, you're going to see consumers not just personalizing their choices, but actually automating these choices. So when you have the second that you get paid, for example, or the second that you've earned your wages, your payroll company can deposit those into your bank account. That's an automated effect. The second that you actually get that money in your bank account, you can have monthly allocations set up. So say you want 40% to go to savings, 40% to go to this other tool, 20% to go to this other tool. Those are all factors that allow for a much more simplified and predictable financial life, which is, I think, what everyone is striving for. And right now, Sean, you spoke a little bit about like the meme trading and the day stocks, right? Like that's not where we see the average consumer participating in fintech. Those are for people that are pretty highly involved in their finances and know a little bit of something or have read a little bit of something and sort of are moving their money around in that way. What I'm hoping to see is for that is to broaden the inclusion piece. So consumers that typically aren't automating or typically aren't super involved with their finances, how do we make it as easy for them to manage their money as for someone who just invests with a wealth manager? And I'm really excited about open finance and the ability of open finance to do that. And I'm hopeful that the CFPB right now, the Consumer Financial Protection Bureau right now, is doing rulemaking on Section 1033 of the Dodd-Frank law. And they're going to actually write the rules of the road for what this ecosystem looks like. Similar to what the European Union did with PSD2, we're going to see the US have some more regulations in this space. And I think that's going to sort of change and codify a lot of what's happened in the fintech over the last 10 years and put rules into place and sort of up-level the entire ecosystem. So we're excited to see that as well, Plaid.
That's awesome. Sean, you spoke briefly about risk. And so what do you see as some of the gaps and pitfalls? And where do we need to go to ensure that we're responsive to all communities?
Sure. Thanks, Erwin. There's a lot of areas, but if we take it from like the upside downside perspective, if you think of the ability of alternative credit scoring or underwriting to include more people into the formal credit system, there's also a possibility that new technology, new approaches might be kind of trying to find new ways to exclude people, new forms of discrimination. So are we testing these new algorithms for disparate impact? How do we even do that? There's a lot of restriction around even data around demographic information for financial institutions. So it's a big, complex topic, but that would be one area where I would focus. I mentioned new kind of behavioral science informed products, product design that encourages users, sometimes without their knowledge, to take certain actions. So, I would say, maybe some of the meme trading that Katie responded to my comment on, maybe some of that market is pretty advanced fintech users, but we do see a lot of money flowing into cryptocurrency. I mean, clearly there is a lot of activity and a lot of people using these new platforms. I mean, you can't watch a sporting event in the United States right now without getting advertisements for crypto exchanges. So it's clearly there's a lot going on there, and so asking ourselves, are there certain incentives that are innate to a business model that may make money off of more transaction flow? What does that mean for how they are promoting certain types of activities on the platform? So I think that's an important question we should always be asking ourselves when we're looking at new business models as well, especially if they're offering services for free, right? So what's the actual underlying cost? I think that's always something that a consumer should be asking as well when they're using a new service. Digital divide is still a huge issue. We know that low-income populations are much less likely to have a smartphone, a laptop. I think at this point, a majority of people of all income levels in this country have those devices, but not all. They might not have access to high-speed internet. There's a conversation in the previous panel at the end I heard about grandparents and parents and how they make bill payments or what have you. And these are real live issues for all of us. It's not just low-income people as well. And yeah, I'd say just kind of protecting and codifying data rights, making sure people are aware of what their rights are, portability. I think a lot of what Katie's talking about at Plaid And just making sure even if someone has a right to something, it doesn't mean that the firm that is necessarily fully safeguarding their data. So it's about having rights and codifying those, but also making sure and supervising firms that are kind of the custodians of that data and making sure that they're protecting it. So those are some of the areas that I would focus on. And of course,
I need you guys to keep that door closed. I'm live right now on a webinar. Please close the door, please.
I think that goes a little bit beyond scope of
you got to move out of the way quick. You got to move out of the way quick. You're on camera.
Katie, I don't know if you want to jump in on that one.
Yeah, absolutely. So I think that, Erwin, your question was about like what are the sort of gaps or pitfalls in fintech? I don't think they're new. And so, what we're seeing is that like there's historically been misunderstandings for consumers across financial services. Debt collection agencies have existed. Overdrafts are one of the highest costs for consumers of the current banking ecosystem. There's high interest credit cards. So these have all been around, and fintech, of course, is going to have their own gaps and pitfalls as well. And regulators should absolutely go after bad actors that mislead consumers. They have the ability to do so through UDAP violations. I think that there's a whole host of ways that we should be making sure that fintech just doesn't exacerbate the problems that are currently in financial services. And so, I just want to caution with the idea that fintech is somehow introducing new misunderstandings or new problems into the ecosystem. Those have been there. And unfortunately, there are probably some fintechs that are capitalizing on this. And so, my thought would be that we should absolutely go where there's a gap. The regulator should absolutely go where there's a gap in transparency or a gap in understanding for consumers. I'm not sure that like the current privacy laws that exist today, like CRPA or GDPR, are necessarily the best option for consumers in actually fostering understanding and transparency. So looking for ways to actually foster real understanding and transparency, like who's using my data? What data are they using? How do I quickly revoke access to that data? How do I quickly delete that data? Those are all opportunities for much higher involvement, much higher practice of actually protecting themselves for consumers. And I think that that's where we should really be looking.
Great. Thank you very much for that, Katie. Have a little family interaction happening live right here.
That's one of the perks of working from home. We get to meet everyone's families. I love it.
Absolutely. Gosia, I want to have you just think about this a little bit, but in that second part of the question, some folks have misunderstood what they're able to do, such as wipe away debt or garner huge earnings. And what are the realities from some of the work that you're doing and limitations within fintech?
Sure, happy to share sort of from our perspective. And we'll say I'm just happy it's not my child or dog today, It happens often. But yeah. So I think as I mentioned before, and I'm sort of like a broken record, but we're at a transition point. And because of this transformative nature of these next generation technologies, we really need to make sure that we use this expansion and usage as an opportunity to create tools with women, immigrants, and BIPOC folks in mind. And I'll just keep saying that. I think this audience is a little bit different than some of the other audiences that I speak to, but I think it's like just want to make sure that we keep that in focus. And I think, Erwin, so one thing I would say, like currently, some of the data sources might not include LMI people to a degree necessary to make accurate AI recommendations, right? Like the way you create these technologies is how they then respond, right? So more data is needed, particularly when it comes to underrepresented groups. And again, I speak from sort of the side of the consumer, of the LMI consumer, because that's sort of where our research is. And really what we heard from our survey, in terms of places where they don't feel comfortable are around security, being misunderstood, and sort of about the uncertainty whether their needs would be met. So for security, our sort of in-depth interviews emphasized concerns about overall security and desire for assistance through a human agent, right? So like, can I connect to somebody that I can actually talk to if this doesn't work out? Being misunderstood, people, worried whether you have an accent or, other sort of things like, am I actually going to be understood when I'm talking to the system? So that's another thing that sort of came up on multiple occasions. And then the final one, as I mentioned, is the uncertainty that their needs will be met, especially, folks are coming in with super complex histories with financial hardship, and they expressed the desire that a human agent follow up if they're not able to sort of meet their needs through the AI. So I think while we have this opportunity for change, there are still multiple concerns that come from LMI that need to be addressed, and we need to continue to do more research and then look for ways to implement through partnerships. In terms of the second part of your question around sort of people thinking that this is sort of going to save their life or get rid of their debt, I think it's also on us to make sure that the messaging and how we're reaching people is clear, right? Like that this is a tool and this is not something that will save you. This is specifically, I think being clear with people makes a lot of sense. These are the specific things that this app can help you with, and these are these other things where you need to talk to a person or you need to engage with some other sort of non-fintech solution. Yeah, so I think being clear and making sure that people get what they need.
That's great. Now, you kind of mentioned this, Gosia, the part about building trust, it kind of was an indirect and undertone and theme from that standpoint. It seems to be carrying over. So, Sean, I saw you nod. I want you to kind of pick that up, but if Katie and Gosia, if you can think about that in a response, that'd be great. I'll just refresh the question for you. How do we build trust for financial services to meet LMI consumers where they are? And what does that look like to meet historically excluded consumers?
Thanks, Erwin. Yeah, I mean, a huge issue, and it's really is all about trust, isn't it? I mean, even the role that we play as financial regulators, central bankers. I mean, so much of what we can do is because the market, the economy trusts us and what we say when we're making monetary policy or conducting financial regulation. But it's built over time, right? It's not just something that happens overnight. So it's a multifaceted effort among public and private stakeholders. Right now we're seeing a huge refocus on the role of minority deposit institutions. I think that's a great thing. Part of the issue I think is people not feeling welcome. So how do you make them feel welcome? We're seeing, at least in the fintech space, a rise of, there's different terms for this, but I guess one term would be affinity-based fintech. So firms that are focusing on a given identity or demographic group, whether it's Black or Asian Americans, LGBTQ, based on someone's profession, gig economy workers, musicians, immigrants. So a lot of fintech services that really are truly designed to meet people where they are. So specifically designed solutions. If you're an immigrant, maybe you have a credit history in another country, helping you port that history, or maybe you don't have one, but are there other ways we can kind of get to a quick sense of your credit risk to help you build a US credit score? Or maybe you're making remittance payments back to your family in another country. How can we lower the cost for you? So the kind of the problem solving, and then also on the front end, how do you make people feel welcome? Well, you have people that have a similar identity to them that they can kind of connect with just naturally and feel welcome. So I think that's part of the trust building, and just designing products so that people feel like first order users of the product. So not feeling like they're an add-on and maybe it's too expensive for them or it just doesn't work for them. So I know that Propel was speaking in the previous panel. That's a lot of what companies like Propel do, and we need to see more of it. And it's getting back to this concept of financial health. So talking my own book, but the reason why we're focused on it is to the extent that you really can focus on outcomes and can convey in meaningful ways that these financial services are helping people build their financial health, helping them save a little bit more, spend a little bit less, build resilience for an emergency fund, helping them unlock longer term, achieve longer term savings and investment to connect it also to a life goal, whether it's saving for education or a house or whatever it might be. The more that we can do that and make these products tangible in their impact in a positive way, I think that is also another way to build trust. So just improving the quality of financial services, and again, targeting it to certain problems and niche groups, I think that can also be a way forward. And so that's partly why, from where I sit, from the perspective of regulators and policymakers, I mean, we think about safety and soundness of a banking system and financial stability and protecting consumers. But also, and this is more blue sky thinking, but to the extent that we can, in the future, just imagine a future where we're actually measuring these outcomes of financial health and there's some transparency around it in the market, consumers can make a choice, maybe firms start competing on it. But the extent that everyone can see this and they believe it and they trust it, that this is actually happening, that this is an outcome of the financial service, I think that is the way you get people to come in to what we hope is a safe and sound financial system that works for everyone. And I will very quickly plug a podcast that we released earlier this year called Financial Inclusion and Beyond. And we talk a lot about this stuff with product designers, impact investors, behavioral economists, that sort of thing. And I think the link may be on the conference website. But so it's all about this trust issue and how you do it.
Sean, I will definitely check out that podcast. And Erwin, I want to weigh in on two different thoughts I have there. So the question is, how do we improve trust in both banks and fintechs, and how do we meet consumers where they are? So I'm going to touch on the first part of the question, which is, how do we improve trust? I agree that's a real problem. It's something we saw with our hair survey poll. Banks are still the most trusted source for consumers' lives. I apologize for the background noise. It's always something on a webinar. So banks are still the most trusted source for consumers' lives, and 63% of consumers think fintechs are trustworthy, but are still uncertain. And there's a lot of uncertainty out there, and that's partially because fintechs are fairly new, and there's this conception that maybe fintechs aren't regulated. But if you're a fintech, you know that you are actually heavily regulated and subject to every regulation in the book. And if you're not following those regulations, you're breaking the law. So I think that there's going to be an opportunity for both Congress and the agencies to build more niche fintech targeted rulemaking that makes consumers feel safer with them. And security and privacy. Everyone's always worried about the privacy, and what they're really worried is about their security. They don't want money moved out of their account. They don't want a data breach where someone gets access to their social security number. And financial services, historically, large industries haven't always done the best job with that. And so fintech seems like the next opportunity ripe for this. And so I think making consumers feel like their security is valued and their privacy is valued in fintech is going to be really important. And, moving the needle forward on that through actual building tools for consumers to see where their data lives, how long it's lived there for, and how to easily remove it from that ecosystem. And at Plaid, of course, we think a lot about the data access ecosystem. So there's a lot of talk about screen scraping and sharing credentials in the ecosystem. Plaid doesn't want to collect credentials. We've been historically screen scraping because that's the best way to provide access to consumers, but we're moving to APIs, and there are ways to screen scrape without accessing credentials. And so I think that the industry as a whole is moving to a much more consumer-friendly ecosystem where consumers will feel more comfortable. So it's a little bit on the first part of how do we build trust. The second part is meeting consumers where they are. So Morning Consult did this really interesting survey, I think it was a couple of weeks ago, and they saw that 58% of underbanked consumers say they can manage their finances just fine without a bank. And I thought that stat really stuck out to me because we keep saying unbanked or underbanked, right? Like implying that people need to get to a bank. But maybe it's not that they need to get to a bank. A number of other countries are managing consumers are managing their financials totally on their mobile phones. We've started to see this unbundling of financial services where people are using fintechs to pay. They're using fintechs to store a digital wallet. They're using Apple to store a digital card. So there's a whole host of technological services that sit outside of a bank. They might have a banking partner, but they're all available on everyone's phone. And so we're talking, and Sean touched on this a little bit. So we keep saying we need to get people banked, but I think what we really need to do is give people financial services. When you actually looked into the underlying problems with consumers and why they're not banked, it's either because it's hard to get to a bank branch, and we've seen a lot of consolidation in that space as well over the past couple of years, or the past 10 years or so. And also consumers, one of the bigger problems one of the bigger problems that consumers have is they don't have enough money to put into a banking account. And so what we actually need to do is like get people an income, and then they can use the banking services that they choose. And so there's a whole host of issues that we can solve for there, but just saying we need to move people to banks is not the answer. There's a million other ways to make sure that consumers are living financially healthy lives.
Katie, that was great. Thank you for that. Gosia, if you can provide a distraction for us, audio or visual, that'd be great as well in your background.
You know, I was going to say that, like, I hope my dog barks, otherwise I will feel excluded from this from this party.
So really, the work that Commonwealth has done in trying to figure out how to build that trust. What are some of those things that you're really looking at, and what do you see as kind of cutting edge activities in helping to get consumers in that right space?
Great question. I mean, I will first say, Katie, we work with Plaid and many other fintechs, but it's good to hear that, when you were talking about the scraping, other things, like just, hearing about what the fintechs are doing on their end, to sort of make it more accessible. And I think you did make a sort of a great point that often the fintech ecosystem is providing opportunities for low and moderate income folks that are excluded from the traditional banking system, right? Like if you can't access that, you might be able to, manage your money in an app or transfer your money in an app. So I think there's definitely truth to that. And also fintechs can sort of, I think, innovate more easily than large financial institutions about how to include more people in the financial services. But I do think it's also an opportunity for traditional financial institutions, as more people transition to online banking, to be sure that they're, making apps that are accessible to everyone, including those sort of living on LMI. And I guess another point that I wanted to make is that generally there's not much research available on how these new technologies can meet the needs of people living on low and moderate incomes and address their concerns. So I think, again, there is research, as you can see here, right? Like the three folks here, but generally I think there is more that needs to be done. And because without that research, it will be hard for innovators to design solutions that reflect the needs and aspirations of people who are financially vulnerable. And one could argue that those are the people that need these services the most, because again, they might not be able to get a regular bank account because they're in the check system or other sort of issues of being undocumented and such. So I think so that's why we're going to sort of continue doing research in this space. We actually just started a field test with Boost AI, which is a fintech that provides chatbots to financial institutions. So together with them and Michigan State University Federal Credit Union, we're sort of going to dig deeper and understand these concerns and how to address them. The test will, sort of look at trust, comfort, engagement, and financial well-being of folks. And again, I think I mentioned earlier on that our research sort of, we decided to focus on conversational AI. So some of the questions we'll be asking are around, when chatbots proactively reach out to users who have experienced a recent financial hardship, does that build trust in conversational AI and increase financial security for the users? So looking, sort of digging deeper beyond what we found in our survey, the report that I think is also available on the conference website. But I'm also happy to share if people reach out or just can go to our website, buildcommonwealth.org. And I think one idea we know can help build trust for users from our surveys and interviews is to offer options to easily connect with a human agent, which I mentioned before as well. Users from the survey and the sort of in-depth interviews felt more confident in AI when they knew that they would talk to a human or receive confirmation from a human. So it's sort of, I think, what people in the industry call phygital, my new favorite word that I learned recently. Really, right? Like just knowing that if this gets too complicated, or that we're able to sort of transfer to to talking to a human, if that chatbot is not able to answer it. So I think there's still lots to figure out in terms of building trust, and I think it's not only about making the system or apps or whatever it might be trustworthy, but it's also making sure that they are trustworthy, right? Like, Sean is working on the end to make sure that there are protections. The fintech industry Plaid is looking at sort of how do we make this more safe for consumers. So I think we all have a role to play in making sure that they are developed in a way that are actually trustworthy, and that's how they can build trust, right? So I think I will end here. And
that's great. Now, I think one of the things that really comes up as it relates to trust is concerns around privacy and security. And so it's something kind of a underlying tone that exists. And so what lessons have been learned? And I'm going to push this first part of this question to you, Katie. Kind of what lessons have been learned around data privacy and security in terms of applications, but also respecting consumer privacy?
That's a great question. So we know that consumers want transparency and they want easy options. When you look at some of the initial data from CRPA, you actually saw that consumers really weren't deleting their data in the way that was expected, because it's just kind of difficult today to do so. And it's also difficult to understand who all has access to your data. So consumers should know who has access to their data and what they're using it for. They should have the right to only share the data used to power the service that they want. And they should know what data is shared with which applications. They should be able to revoke access to those applications when they're no longer using them. And they should be able to delete data from Plaid or from those fintechs if they choose. So we actually, one of the ways we think about this is from a market-based standpoint. Like, how do we build a best practice tool for consumers to do this that doesn't currently exist in the market today? So we built something called Plaid Portal. It's currently in beta right now. I'd encourage everyone to go out and check it. It's my.plaid.com. And here you can go, you can see which bank accounts you've connected to which applications, which data those applications are pulling. You can revoke access. So if you've connected, for example, if you're someone like me who gets a big idea in her head at once a month and is like, I'm going to use this fintech app to automate this portion of my life, and then may not actually follow through on that, you can go through and say, oh, I connected this 6 months ago, I've never used it, I'm going to revoke access today, and that data and that application can no longer access your data. You can delete data from Plaid with just one click. And so these are the kind of tools that we see consumers actually want to use. And so we think of it from how do we build best practices in the marketplace to encourage, sort of larger scale adoption among competitors, among others in the fintech ecosystem, but also to give regulators perhaps an example of what it could look like if there's a one-stop shop for data privacy controls, for example. And so that's how we've approached it. I'm hoping that's how the rest of the industry starts approaching it. And we've seen a big shift towards this, towards wanting to be transparent with consumers, towards wanting to make sure that consumers, that things aren't just hidden in terms and conditions and your data is farmed forever. So there's a lot of pushback on that. And one thing I do want to say when we're talking about financial data is opt-in. So consumers opt into using a service. And that service uses their data to actually power the service. It's different from when you think about like a social media platform, right? Where you're opting into a social media platform, but the data that they're pulling isn't necessarily needed to power that service. And it doesn't necessarily make sense why that data is being pulled. And so really data should just be used for the purposes that it was intended for. And data that isn't needed to power service, shouldn't be used, is I think the simplest way to put it when we think about privacy. In terms of security, I really do want to encourage regulators and policymakers to think about those two as distinct and different. When we've asked consumers questions about what we thought were like privacy questions, what we found was that most consumers are actually concerned about security. And so making sure that consumers, like making your security practices transparent. We do that on our Plaid website, making sure that you're using best-in-class security practices, not having the government necessarily mandate security practices. NIST is a great tool. SOC 2s are a great tool, but the security architecture has moved way beyond those tools, and there's a lot more modernization that happens on a day-to-day basis in the security realm now. And it's much more responsive to the types of fraud we're seeing now. So I would encourage regulators to think about nimble, market-led standards in that space.
Yeah, it can be kind of challenging for us as regulators to be nimble in that perspective, but we'll give it a shot. Gosia, what, getting the perspective of Katie and of Sean, what do you have to add to that?
First of all, I'm excited to see that panel because I'm probably connected to 20 different things that I don't know about either. So it'd be nice to have it in one place. So excited to hear about that. I mean, from my perspective, I don't know that I have anything to add in terms of like technical aspects of data privacy and security. I mean, obviously it's important, super important issue. So I'm glad people like Sean, Katie, and you, Erwin, are sort of thinking about it. Even though you can't maybe always be nimble. I mean, obviously the perspective that I can bring and that I sort of have been bringing here is from, our research and from the consumers. And again, I mentioned before, security can be a major concern for people who are living on low and moderate incomes. And one reason why is, people have very little margin in terms of their budgets. So if you feel overall financially insecure, living paycheck to paycheck, there are more, people are more cautious when it comes to security than people who feel like they have more caution, right? Like people don't want to, people I think in interviews express hesitations with using online tools and, what if my security is breached and I get locked of my account and I won't be able to meet my sort of short-term financial needs because I might not have any other sort of backup sources. So again, security is important, but it's also like the mindset of the people who are using it, right? And like knowing that they have to have access to this money. So it's a very different sort of thinking that some of us might have. So yeah, the security sort of kept coming up we had some questions in our survey, and then we sort of followed up with people in in-depth interviews, asking additional questions about what users wanted to see in AI technologies when it came to privacy and security. One trend, for example, was that users wanted to know who would have access to their data and what it would be used for, which goes back to what Katie was saying. We should be able to sort of share data, but not all of the data maybe, if it's not necessary for whatever service they're providing. So really making it clear to people, like, where is their data going, what's going to be happening with their data. And, it can be different types of concerns for different people, but I think that was one of the things that really came up. And again, security is overall is important. I don't think anyone would argue otherwise, especially when you're thinking about your own data, but also other data. But based, on our research, it is even more important to those, or I mean, I don't know if it's more important, but more of a concern, like something undermined as they're thinking, as they're engaging with these new tools or even, sort of existing tools. So something to keep in mind.
Great, thank you for that. Sean, you have a couple of reactions for us?
Thanks, Erwin. Yeah, it's garbage truck day today in my neighborhood, so I may join the party with the ambient noise. That's what that is if you hear it. No, I great comments so far. I think just picking up on the focus on not just privacy but security. I think where we come at this is we just like to refer to data rights and think of it more expansively. I think particularly in this country and among elite institutions and conversations like this, you often have a focus on privacy. It gets elevated as the one thing that we really have to worry about when we're talking about new technology. And so I'm glad to hear the conversation around security. Of course, it's something that we as regulators, like you said, Erwin, are really focused on, but also that right to ownership, portability. I think Katie was getting at this as well. I mean, sometimes it's hard to define who really owns that data. It's not necessarily just the customer. There may be some proprietary analysis that comes on from the financial institution's perspective. How do we think about that? We're not there yet, but I can imagine a future if you're a small business selling on another platform and you have transaction history there. I think we would want to make sure that history is something that small business can take advantage of if they're trying to get lending from anyone in the financial system, right? You don't want to just be locked in to that big platform, right? If they're doing their own lending or whatever it might be. So that could be an example I could see in the future where we really want to focus on what is your data right there. So it's not just privacy, it's not just security. I should also plug, if you're interested in this topic, as the Fed, we have a lot of research and analysis on data. So I just Google SFed data, and you'll find a lot of work from my colleague, Caitlin Azra, who's really smart on this and our resident data expert. And I was talking to her before this panel, about this question, and she just emphasized that we should really separate out the concept of codifying those data rights and just making sure that firms are protecting and kind of safeguarding the data, because we can do all the things in the world to define it at a legislative level or at a supervisory level, but if we're not actually getting involved in making sure that firms in the marketplace are actually taking these precautions, then it's not enough. So it's the full package there.
Sorry about that. Really looking at this. Yes, we have one more question we're looking at. And this is the potential for partnerships between nonprofit, public sector, and private sector. And, kind of thinking generically, we can kind of name names, but not necessarily so. What are some of the things that you've seen work as far as these partnerships and the potential to try and really take on some of the challenges that are existing? And Gosia, I'll ask you to start, please.
Again, I think where we started in the beginning, talking about that we're really sort of in an unprecedented moment based on the combination of increased usage by consumers, particularly LMI, who are disproportionately BIPOC folks, and really the high interest and openness to the fintech sector from startups to established sort of actors. And I do think it's only with partnerships that we can make change in a way that is beneficial to all consumers, but especially LMI consumers. I mean, the role that nonprofits play, and certainly Commonwealth is one of them, is to bring sort of the voices of LMI people to the table through consumers, research surveys, and then, with the hope of informing, the design of fintech products and the development of those products. And it's the fintechs and financial institutions and others sort of in this ecosystem that can make it happen. We can work together as an ecosystem to build these apps in a way that really builds trust through concrete changes and makes the products more accessible and equitable. Please forgive me. I think you know what I mean. But I think, at Commonwealth, I just mentioned one of the obviously we partner with Plaid. I mentioned our partnership with Boost AI. But for most of the things that we're doing, we're working with fintechs and financial institutions often, because I think it's only in partnership that can make the changes, right? Like I am the director of the lab, so the research team, sort of starts with seeing what's happening with consumers, and then we have our accelerator team, which I think has more so with Plaid than the lab team, and really thinking about working then with like large sort of institutions and fintechs, thinking about once we learn something that's useful in doing this, how do we then transfer that information to people who are actually creating these tools, because we're not, and really to inform how they're doing it and creating these tools sort of from the ground up in a way that will make them accessible. And I think often by making them accessible when you're creating them, you're making them accessible to the most sort of number of people. So I think it's also a smart sort of business decision to do that. I think it's called the curbside effect, right? Like you make it as accessible to as many people, and then more people start using it. It's accessible not just to the people that you were thinking, but sort of to a lot of larger groups. So I think, and that can only be done in partnership. That's not only like my life's mantra is like collaboration, but also sort of the Commonwealth beliefs as well.
Great. Katie, as kind of on that the business side, the more commercial component, what do you see as far as partnerships and the creation to try and really expand access for low and moderate income communities?
I love this question because I think there's so much that fintech and government could do together if they work together with the help of nonprofits. So like one example, right? During the Paycheck Protection Loan Program, the Small Business Administration opened up their dollars to fintech providers for the first time. And what you saw was that a lot of the larger banks that weren't going to lend to new clients or anyone they thought might be potentially risky, they ended up going through the fintech applications, and that ultimately allowed for more dollars to flow to minority-owned businesses. And there's been a number of research and studies out there on that. There's also opportunities for fintechs to partner with government in so many other ways. When you think about like the unemployment insurance, the way we distribute that today, a lot of times on a prepaid card, that if a consumer loses that card, they have to pay $15 to get access to a new card on, and that's, to me, is insane. You should be able to just automatically deposit that money into the account of your choice, and then have access to those funds wherever you like. And when you go through the actual unemployment verification process, it's incredibly onerous to consumers. Fintech can help. They can report out income earnings. They can report out whether someone is, we would love access to more of the federal government data, because we could help consumers quickly verify themselves, quickly prove that they are meeting the unemployment requirements, et cetera. And right now, that's such an onerous process for consumers, and it's a barrier to access, certainly. And I think that there's a lot of ways that we could reinvigorate that. Last thing I'll say, another example that comes to mind is in the student lending space. So no one loves their student lenders. I hate to say it, but no one's in love with the interface of their student lenders. And you've seen a huge problem with public service loan forgiveness or with income-based repayment. Consumers don't know if they're making the payments on time. They're often not getting their loans forgiven because of this. And a number of fintechs have popped up which integrate directly with the student loan servicers and walk consumers through their loan payments each month. And it's like three clicks on your phone, and you can clarify that you qualified for public service loan forgiveness for that month, and that payment counts towards that. So these are all examples of fintechs potentially innovating on more outdated bodies or on more outdated infrastructures that can make consumers' lives so much easier and really like provide the difference between financial success and a problem in the ecosystem. So I just get excited when I talk about that stuff, but that's all for me.
Yeah, that's great. Sean, can you add a little something to that?
Sure. I'm glad Katie mentioned the Paycheck Protection Program. I had the privilege to work on a few different projects related to small business relief during the pandemic, and just was really blown away by all of the partnerships. Sometimes it was just a lot of brainstorming on a conference call or a Zoom early in the pandemic, but between community development financial institutions, nonprofits, consumer advocates, small business advocates, and financial technology firms, banks, just really kind of an all hands on deck type moment, and a lot of great input. I mean, I think we can do better than we did during that period, but I think it was an amazing effort in a lot of ways. When we look back on it, there's lots of failures, but there's a lot we did well for supporting small businesses, and that was all about partnerships. And I agree with a lot of what Katie said. A lot of areas for more innovative partnerships there. I mean, just from my perspective on next steps, our team is beginning pilot research on how firms in the marketplace are both defining and measuring the concepts of financial inclusion and financial health. And so when we step back and think about financial regulators and the way we look at risk, and all of these different complex mandates, but also all the potential positive ways we can influence the market, even coming down to designing new digital payment products. We have Fed now, we have speculation about central bank digital currency. There's all sorts of interesting stuff coming out of the Fed. But to the extent that you can help us as financial institutions, nonprofits, others working in this field, make the case for why technology, why financial services why and how they're promoting some sort of positive outcome. If we become more specific, clearer, that's going to help us understand the costs and benefits and the risks and the trade-offs when we're making these policy decisions, supervision decisions. So like I said, we're starting some pilot research. If there's anyone out in the audience that would like to talk more about this, I'd say look me up on LinkedIn and shoot me a message, because, and Katie, I'd love to talk more about this as well from your perspective. But, just understanding, and to the extent we can make the case, it really helps our work. And that involves partnership with the people that are actually serving the customers at the end of the chain here.
Well, based on the couple of questions that I've gotten so far from the Jamboard inserted to the chat, Sean, I think someone will take you up on that offer. But kind of a really basic question came through with a request to offer some clarity on fintech, as in what is fintech? some audience members feel that the term is so general and broad that it's confusing. I'll just open it up and first come, first serve on this one.
I can try to take a stab. So fintech is the combination of financial and technology. And I actually think fintech can be however a consumer perceives it. Like the first wave of when we think about fintech, right? It could be anything from using, if you're a Chase customer, using the Chase mobile app on your phone instead of going into a bank. A lot of consumers think of that as fintech. There's other consumers that think about someone like Robinhood or Venmo, or the ability to interact with their finances completely through a technological device as fintech. And so I'd say it's any area where there's that allows a consumer to touch their finances, do anything with their finances outside of a traditional banking entity. And that could even be that traditional banking entity's mobile app. So I think it's a broad term, which is why this is a good question, right? Because it's one that could encompass a whole host of things. But that's how we think of it at Plaid, at least. And I'm curious to hear if anyone else has any different definitions.
No, I would just add, I think, Katie, I think that makes sense, right? It is such a huge thing. And like the other thing I will say that's also, even just financial services, there are so many different options, right? Like there are fintechs for savings, there's fintechs for debt reduction, for credit building. Katie, we were talking before about student loans. There are a bunch of fintechs, focused on that. And we actually did some research with Summer, that's one of the fintechs working in the student loan space. So I think, to the person that asked that question, I would ask for every sort of financial, not even issue, but like need is probably more of the word. There's, I don't know, many fintechs. I don't know, Katie, how many did you say the Plaid connects? Like 5,500,
yeah.
Right, or 5,500. Most of them are probably in this sort of fintech space. And, again, any fintech you can sort of imagine, I think it exists, and many for often, 100 for savings, 100 for other things. So I think there's a broad range of products.
Yeah, not to go like galaxy brain here, but if you think about it, I mean, money itself is a technology, right? I mean, that great presentation that Erwin had at the beginning, you could have gone back to, I guess you had an abacus in there, but just really all of these innovations around money. It's a weird concept, right? We're saving for the future, we're borrowing against the future. I mean, that in itself is a form of technology, but not to be glib about it. But another, beyond just those technical solutions, another way we think about it is business models, innovative business models. So maybe there's a cross subsidy involved in, this is a live and kind of controversial issue in the United States where commercial activity is often separated from banking, but is there some sort of commercial activity that is cross subsidizing the delivery of financial services? So that could be considered fintech, even if maybe it doesn't look particularly fintechy from the outside. That's one maybe nuance I would add to the conversation, but I think Gosia and Katie handled it well.
I would agree. I've heard something even more simplistic, that it's just outside of the regular brick and mortar building where it's considered that transactions take place. Now, that considered, you can still go into a branch and you're using technology to take care of your transactions. So it really is starting to cross over quite a bit. This next question is there a one-stop shop for information around whether a financial resource has been reviewed and approved by a regulatory body? I think this is a pretty tricky question. I'm going to ask Katie, come on, jump on in.
Well, I was going to say, you're the expert here, but I mean, given the hundreds of state and federal regulators, it would short answer is no. Regulators all have their jurisdictions and purviews, and Sean can speak a little bit more about this, but there's hundreds of state and federal regulators. And so there's not really one-stop shop that says this fintech is good, this fintech is bad, we've reviewed this, we haven't reviewed this. There are supervisory bodies, like for example, Plaid is asked to be supervised by the CFPB, which would include supervising all of our customers and our customer compliance onboarding program. And that would be one way to sort of feel more comfortable with the fintech ecosystem. That's a proposal we put out there in our 1033 comment letter. And happy to talk more about that with interested parties. But short answer, no. Sean, I don't know if you have anything else to add there.
Yeah, I would love to know what that resource is. No, no short answer there. But I was going to say, I know there's been some questions in the audience before and during this session about, what resources they can point customers to. I always try to click through on like the About Us page of a fintech and see they might list a little bit about, are they FDIC insured? There's a lot of, products where they may be offering something that's facilitated in the back end by multiple different banks or different fintechs as well. It can get very complicated from a consumer perspective. So unfortunately, that's just the current state of affairs. But yeah, no one-stop shop.
I agree with you both wholeheartedly. It seems to be even a little bit more complicated. I would say, check to see if an organization is regulated, and then try and learn more about what's happening with that particular regulator and those relationships. Katie, we have a question regarding the movement from open banking to open finance. And the question is asking for you to explain those terms a little bit more. And is there some danger of consumers losing track of the ball in an open finance environment where so many transactions are automated? And I can repeat that if you'd like.
No, that's a great question. So open banking is the concept that consumers own their bank account data. So the idea that anything that's in your bank account data you own, so long as it's not proprietary to the bank, as Sean spoke a little bit earlier. So that would include like the transactions you use each day, your balance data, your account routing number, anything that's unique to you in your bank account. Open finance takes it one step beyond just what's in your bank account. It says that consumers own all of the data that touches their financial lives. I gave some examples before, but that includes their payroll data, their investments data, their credit card debt, their student loans, their mortgages. So it's the idea that anything that that touches a consumer's financial life, that's why it's called open finance rather than open banking, belongs to the consumer and should be shareable by the consumer with an entity of their choice. And I actually don't think there's too much of a risk of a consumer losing track. One, like I mentioned, it's an opt-in system, so you would only share your data in the instance that you wanted to share your data. An example of that would be like, maybe I want to switch my bank account. And so I quickly connect my payroll provider to a new bank account. And that's my new bank account. And that took 2 seconds. And now if you want to switch bank account, it takes a little bit longer. But there's a whole host of things you would have to you would have to choose to share your data. So it wouldn't happen without your knowledge. And when you're sharing that data, it's usually for a specific use case that you want. Like for an example, like the way we think about it now is when you enter your account routing number, for example, I use Pepco to one of my utility providers. When I enter my account routing number into Pepco to do automatic payments, that's an example of like an automated transaction that occurs each month. That could be just facilitated more easily through an open finance ecosystem, so that I'm not having to just cut and paste my account routing number, which maybe isn't the most secure way to share my data, into each individual bill provider, for example. And so, the automation doesn't occur without your knowledge or without your choice. So I think there's less of a risk there of you sort of losing track of where you've shared your data and how you've shared it. And as I mentioned before, there are tools to understand where you've shared your data and what type of data is being shared that are live in the ecosystem today. So you could always double check to make sure that you hadn't connected it somewhere that you were not excited about connecting your data to.
Thank you for that. I think that provided a lot of clarity. And really, it seems like there'll be some additional management capability for consumers as a result of that, since they are really controlling the use of the information. So that's great. Now, this next question, and I think based on how we've been responding, we might have enough time to answer this question and possibly one more. But this first one is, there was a bit of a survey course earlier in the session about the spectrum of fintech that's out there. So that was from an earlier session. What do you all see as the most promising / useful tools in the fintech realm? Again, what do you see as the most promising tools/useful tools in the fintech realm?
Happy to jump in first since I didn't have much to add to the previous questions. I don't know. I think there's so many tools that it's hard to say, what are the most promising. It kind of depends what you need. Before I was, like if you're saving for, Commonwealth does a lot around emergency savings, right? So what are some of the vehicles for saving for emergencies? How can you attach them to existing ones? So sort of depends what you need, right? Like what kind of within the sort of whole, as we said, there's so much in the sort of in the fintech sort of ecosystem. If you need to manage your debt, there's several sort of potential fintechs that you can use. So I think it's kind of hard to say because it just depends on the consumer's need and sort of the I think the need can be addressed by some existing fintech. There's also always the question in terms of, I'm like, yes, I want there to be an open one-stop shop where I can go and look and see, what that fintech is. So, I think that would be useful. It doesn't exist now, as Katie and Sean were saying. But yeah, maybe Sean and Katie have something more enlightening to add.
Sure, I can jump in. I think that there is a lot of opportunity around using new forms of useful financial and economic data or social data that is not, currently incorporated. And nothing particularly radical. The question about what is fintech, and we can talk about what that actually means. But someone pays their rental bill on time every month. They've been doing it for 5 or 10 years, but right now they don't necessarily get credit for that, repayment and that demonstration of their creditworthiness. It's not included. So we're seeing Fannie Mae and others talking about starting to finally incorporate that stuff into an underwriting for home mortgage, utility bills, basic stuff like cash flow based analysis from a transaction account. That's something that all banks have. They're the primary. If there's someone who's a primary holder or a primary user of a certain bank, that bank is going to have a lot of insight into their inflows and outflows. That's useful information. That's just fundamental cash flow analysis. Is the bedrock of a lot of financial analysis. So I think thinking a little bit more creatively about how we use that, and that comes back to the regulator perspective too. We have to think about how do we currently, do firms feel comfortable using these sorts of techniques, and again, making that case that this can be more inclusive, that there's an upside to it, and then understanding the risks. I think that's all part of this. But so I'm excited about that. I talked a little bit before about kind of financial health and how new technology product design can promote healthier behaviors. I think that is possible. So I think just having better product designs to help people with that savings, with that planning can help. And this is a simple one, or maybe not so simple, but if you think about just how money is really hard for a lot of us, there's emotions, it's just an abstract concept, like making some of these decisions that are so disconnected from our day-to-day, our moment. Anything that can help someone visualize the impact of this little decision I've talked to really interesting economists and product designers that work in emerging markets where they create a calendar where someone has like a visual where they see, they saved this money and it helped pay for their kid's medical bill, and that made a meaningful impact on that child's life and their family. It sounds silly, but I think the way we can make this stuff more tangible and visceral can maybe motivate people that have trouble making these good financial decisions. So that's another one I would throw out there. Maybe a little more futurist. We're not quite there yet.
Sean, can I just add one thing to that point? So you mentioned like the rent data. I think the credit space is super ripe for innovation. We've had 3 bureaus, 1 score primarily that's been prevalent in the ecosystem. We've already seen a number of fintechs that are actually reporting rent data and subscription data, et cetera. Like I want to give a shout out to Zuzu and Perch, which are 2 fintechs that are connecting both rent data and subscription-based data. So all things that show that consumers pay back monthly dues on time. You can see how much is in the consumer's bank account. You can see how much they're spending each month. You can tell if a consumer has a bad month because maybe they had an outlier expense, like they had a hospital bill that month that didn't enable them to pay their credit card. And that's why there was a ding on their credit report. And that's not a normal thing. And so I just think that I think the credit system is ripe for innovation. And I think we're sort of at that cusp right now and have been at that cusp for maybe the past couple of years. I'm really excited to see more innovation in that space. And I'm excited to see generally more competition emerge. I mean, one of the cool things I think that's happened with fintech is it's challenged traditional financial services Some of these aren't always, the best examples, but when you think about, like, for example, trading costs being driven to zero by someone like Robinhood, moving the rest of the industry along with them as well. And when you've seen sort of more pushback on overdraft and fintechs that can protect consumers from overdraft fees, you've started to see banks move back from overdraft fees. And so I think to the extent that fintechs can keep innovating and showing consumers what's possible out there, traditional financial incumbents are going to respond, and the ecosystem is going to collectively get better over time.
Those were all great responses. I think that provided some insight. Just a quick check-in. We've got a couple of more questions, and if you all can stick around for another 4 or 5 minutes, that work for each of you? Great. This next question, what advice do you have for folks working in community-based organizations who are trying to connect folks to fintech products? Is there any kind of wholesome advice that you can present?
This is a tough one to make it simple, but I think, trying to ask what problem you're looking to solve and trying to kind of compare it to a traditional provider. If you're getting a short-term loan, like, I'm not sure if this may be beyond certain customers to do the calculation, but you try to think about the cost of that credit and kind of compare it to some alternative. To be aware of your data rights and to just ask if something seems free, how is it being paid for on the back end? And just, is that something that you should be worried about at all? I think that's a principle that we should all probably have in our broader digital economic lives beyond finance.
I definitely would agree with that. And I think the tone of making that connection, Katie, you mentioned that there's some alternative data that's being collected as it relates to building credit. If that's something that's beneficial for your consumer, or your client that you're working with, then see, that's another opportunity to try and develop some partnerships. Do either of you?
Can I give you a shout out at the FDIC for that? I mean, you all wrote guidance in 2020 saying that banks, particularly community banks, smaller banks, should be looking at using cash flow underwriting data. Very innovative and thoughtful, and I think that's one opportunity for anyone in the banking space to think about bringing more, to think about customer acquisition, to think about bringing more consumers into the credit space. So I was really excited to see regulators being on the cusp of the trend there as well.
Thank you. That was almost nimble of us. Gosia, anything to?
No, I don't think there is anything. Yeah.
Well, I just want to be really respectful of your time. You guys have taken, a fair amount to really go through this stuff, and I greatly appreciate your contributions, both to the conference, but the sharing of your knowledge and your information. Hopefully our attendees will be able to build upon that and expand their activities and their use for fintech with financial services, and to pay attention to some of the work that you're doing so that they can stay on the cutting edge. And with that, I'm going to look to see if I can hand this back to maybe Jennifer or Ryan.
Thank you, Erwin and Katie and Sean. It's a great discussion. I've learned a lot.
Thank you all very much.
Me too. Thank you.
Well, I'll throw the thanks right back at y'all for spending your time with us today. Thank you very, very much for sharing your wisdom, your insight, and I think our brains are all a little bit bigger for having listened to you. So thank you sincerely, very, very much. That's the Bank on Washington Forum for 2021. Thank you, everybody, for sticking with us. Remember that the work doesn't start here or stop here. Take what you learned here and take it back to your agencies, take it back to your teams. Sit on this for the next afternoon, and going into the future, how can we take this and turn it into the next steps? I have to say a sincere and huge thank you to the leader of this team for putting all of this together, Jennifer, who has done an amazing job over her tenure here. June, July, you started. So thank you for pulling all of us together and pulling this mayhem into a 2-day chunk of time that we can all benefit and turn turn this into some beneficial next steps.
Thank you, Ryan. Thank you to everybody who's joining us here today. Wow, this has been a really amazing 2 days. So much information. My brain is full. So thank you. Just a reminder, videos will be available in a few weeks, and the materials will get posted on the Bank on Washington website very soon. If you're like me, you will want to go back through it because there was so much. I'm sure I didn't get it all this first go around. So we'll be sharing that information soon. Please make sure you head over to take the survey for day 2. We really, really value your feedback and want to hear from you. Your feedback helps us continue to provide really high quality and relevant content that is what you want to hear all year long. So the link for both the day 1 and day 2 surveys, there are 2 different links. They're both in the chat. Thank you to all of our speakers. We really appreciate all of the expertise you shared with us and your time over the last 2 days. Thank you so much. And thank you to our sponsors again for helping make this event possible. We really appreciate all of your contributions. Moderators, thank you. You kept us on track, on time. Look at us starting and ending on time. Thank you. And thank you for taking all of the questions and Jamboard and chat and really, facilitating great conversations with the speakers. And Ryan, like you said, thank you for making sure we got breaks. Very important. Thank you to the planning team, everyone who helped, put all of this together, folks from across the state, across sectors. We appreciate all of your input. And then before we rush off to lunch and the rest of the work that I'm sure we are all going back to do this afternoon, just want to add a few more reminders. There are great resources in the program. There's tons of links to articles and information, some from our speakers, some that we have curated for you. So, take a look at those. Please join this conversation. We want to continue having these conversations. So follow us on Facebook, the Bank on Washington Facebook page link will get put in the chat. And then check our website for more information about upcoming events from Bank on Washington and the Financial Empowerment Network both. We have things happening pretty much every month. So we'd love to see all of you join us at those events. Thank you for sticking with us for 2 days of a virtual forum. I know it's a lot of screen time, but I hope it was helpful and that you're taking lots of great new information, resources, perspectives forward with you. The Jamboard will stay up as well. So if you want to go back and grab people's contact information or want a reminder of what we talked about, it's there. Thank you for sharing in this learning opportunity with us. We appreciate your time. And with that, have a wonderful afternoon.